Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody. Good morning. Welcome back. Happy, what's today? Today's Thursday. Happy Thursday. Yesterday we did something fun on the stream. I started a new theme on making it so that traders in the audience can actually ask questions and interact with the stream. We had a lot of fun doing that yesterday, and I want to do more of it. I'm going to, of course, do some chart markups here to start out the stream, but I would like to make it so that throughout the stream, we could collect some questions from you guys in regards to your trading, and maybe I can take some time towards the end of the stream to answer some questions. I don't know. I really liked doing that yesterday. It's fun to see what kinds of questions people have. So let me do this really quick. I'm going to make it really quick. I need to add this to the YouTube description as well. But let's do this. If you have a question, I just dropped a link in the chat. If you have a specific question about your trading that you would like answered on the stream, take a second, fill out that form, and there's a very good chance, as there's not a whole lot of people, not a whole lot of people filling in questions just yet. If you fill in your question, it's first come, first serve, but this is what it looks like. I just want to show you. So you can ask a question, asks you a few things about your question, and then your question will be added to the queue. And towards the end of the stream, I'll take a few moments to review those questions. Good morning, Bulent. Bulent says, may a profitable day be with us. Yes, indeed. Can I pay with Bitcoin? If you're talking about specifically our products on our website, yes, you can. We do accept crypto. If that's something that you're interested in doing, the easiest way to do that would be to contact our support team on our website. Head over to a1trading.com, and in the bottom right hand of the screen, you can just click the live chat feature and speak directly to our support team there. Or maybe we could drop the link here in the chat, Chandler. Thank you very much. To where you can speak to them directly, if that's easiest for you. Someone from our support team can help you out. Gold buy or sell? How are you going to trade the unemployment claims? Thoughts on changes on interest rates? Some good questions already. So thank you for that. I also need to stream deck. Okay. Yeah. Sorry for all the random pauses. I'm still in the process of like setting up that whole question and answers system. So it just hit me as I'm doing the stream. I'm like, okay, I have this little stream deck. It's like a button mashing thing that I can use for quick links and stuff like that. And I just realized, okay, I want to make sure I have that form linked on my deck in case people would like to use that. And I need to quickly access that and send it to the group or to the chat. Getting more and more creative on ways to collect emails. That is correct. Yes, warning, if you join our question, we will keep your email, but you can opt out at any time from our newsletters. So we make it really easy. You know, people like spammy emails. I never understand why they don't make it very easy for you to unsubscribe. Like some do, you know, like when you get like a spammy email and you don't want it anymore, like it actually is in the best interest of the provider, the content creator, to actually allow you to quickly get out of their emails if you don't want to be there. Because just like YouTube or any other social media, emails track like consumer behavior. So like if you're not opening the emails or you're not enjoying the emails, you really don't want to be sending them to that person, right? You only really want to send emails to people who actually want to get those emails, because otherwise they mark you as spam or things like that. So we make it really easy to unsubscribe from anything that we offer. Okay, so let's get into some charts here. As you guys, like I said, if you would like to ask a question, we dropped a link in the chat. Maybe we can drop that one more time, Chandler, if you don't mind. If anybody would like to ask a question on the stream, I'll be doing some questions towards the end of my session here. So let's jump right into it. You've got a couple minutes here to go before we get unemployment claims, which definitely could move markets this morning. Somebody asked me how I'll be trading them. So I don't usually trade like the impulsive move off of a report. You know, I'm not a scalper. I'm not like a super low time frame day trader or anything like that. So I won't be doing any sort of like impulsive, from the hip, take a buy trade or short this market or something like that. Usually I won't do that. Very, very rarely will I make a split second decision based on an economic data point, but I will factor it into my overall analysis, right? So when we get unemployment claims coming in 5 minutes, I'd like to see how that data is rolling in. It's a really important indicator to the state of the labor market in the United States. We're expecting 225,000 unemployment claims in this weekly filing. So if we get significantly more than that number or significantly less than that number, then that could get the market moving in a certain way this morning, one way or the other. So with unemployment claims, let's just say that we get like a 250,000. That would freak the market out, right? That would be bad, right? A higher number, would that be good or bad for the US dollar? Well, it would be bad, right? Higher unemployment claims, more people filing for unemployment would show weakness in the US jobs market. Less would be considered strong or bullish for the dollar, and also strong for the stock market, right? The stock market's a little bit worried about all this tariff stuff. Oh my gosh, the economies of the world are going to crash and all this. What we really don't want to see, and there's conflicting thoughts on this. Some people are like, yeah, get a little squeeze going in the labor market. Let's see it weaken so the Fed will cut rates. I'm not really in that camp. I'd like to see economic stability in the form of the labor market. I don't care if the Fed cuts 7 times this year. In fact, I don't want that. I really, it doesn't matter what I want, but I'm telling you, when I talk about being bullish on stocks, what I would actually be looking for would be unemployment rate to stay low. It's at a low point right now. I'm not, it's like one of those things, be careful what you wish for. I definitely don't want unemployment rate to go up a whole bunch, because yes, will that cause the Fed to cut rates? Likely it would. But that's a dangerous game, right? So I'm definitely not betting on that. I'd like to see economic data like the unemployment rate statistics, unemployment claims, job openings. I'd like to see those stay strong. That would actually be a very healthy backdrop to this economy. We have low unemployment rate in the United States at this time. I'd like to see it stay there. So for unemployment claims today, we want to see a low number. If you're talking about prosperity for stocks, if you're talking about, a stability in the US dollar, stability in the bond market, if you're talking peace, prosperity, and stability, we want unemployment data to stay good, right? Positive, healthy. That being said, if you're a dollar bull, you also want to see that, right? If you want to see prosperity in the labor market, that's going to help bolster the dollar a little bit, which has been in some weak decline here. By the way, that questions form that we just dropped in the chat, first of all, I need to add that to the description of this live stream. Description, Q's and A's. Okay, so I'll have that added to the description. Hopefully by next stream, we'll make that the default to the live stream so that you can grab it in the description. Currently, if you want to ask a question, you have to do it in the live stream chat. Like I said, we'll change that for future ones. Like, do you think the stock market will be stuck in a range? You know, that's the thing is, wouldn't that be something, right? The whole market right now is so up in arms. Like, some people think it's going to rip back and Trump is going to save us all and it's going to be amazing. And other people think, oh, Trump is going to, crash this whole thing and the whole world's going to go to HE double hockey sticks. It's amazing because it feels like, who the real winner could actually be in all this? The market maker. And what I mean by that is that if you are familiar with options, we talk about them sometimes on the channel. Let's just say that you are one of these, maybe the whole market's super emotional. Either people think, and people are trading, man. I've never seen it this strong. I've never seen it this strong. Also, let me not miss the data coming out. People are so polarized, and so many people are trading based on their political viewpoints. What if the reality of it is the market just does a kangaroo market for the next couple months and we just go back and forth? The real winner in that scenario is the market maker who sells calls and puts to the whole crowd, which is personally kind of what I'm looking to do. I'm looking to sell options and stay diversified. You guys know I'm trading gold a lot here recently. I do have some stocks that I've been picking up and plan to buy some more stocks if we get bigger dips. Anyways, guys, we've got our breaking news coming in here in just a second. Unemployment claims coming in about 10 seconds. Okay. Let's see if we get anything interesting for unemployment claims this morning. Remember, a surprise number would get this thing to move. No surprises would cause no movement. So let's see what we get. No movement so far. Okay. What? Wait a second. Hold on. Okay, wait. 25K. Okay, I'm just confused. Okay, yeah. Did Forex Factory just totally prank all of us? I'm not crazy. Did anybody else just see that? Did we just see 25K here for a second and then Forex Factory updated? I think that totally was like an error on Forex Factory. Okay, I was about to say, like, what the heck did, like, I was about to start getting conspiratorial, guys. You do not want to see that. Did anybody else, like, did I just imagine that? Okay, okay, yeah, 25K was showing on the screen for a second. Okay, at least I'm not crazy. You guys aren't crazy either. It was 25K for just a second. But let's not excuse what we just saw here. 215 that's great. 215, we'll take that. 215,000 unemployment claims. That is better than expected. And I want us to think about something, okay? Because I was on a train of thought here before the data that I want to get back to. A lot of people are trading with their politics right now. And I want to encourage everybody in this audience to refute that. The silent majority, the 90% of us that don't make all of our decisions because we like or hate Trump, are actually just trading the data, and we're focused on what we see in front of us, not this skewed, strongly polarized view of the world. Look, if you think the world is, this is just my opinion. This is straight up my opinion on the matter. If you think the world is either going to be an amazing place or a terrible place based on who the president is, I really think, okay, like, I don't care, like, for the rest of your life, you do you. This is not a politics channel. But for trading, if you really let that completely dominate how you trade, you're setting yourself up for failure. Look, people did it under Biden. People are doing it under Trump. People trade their politics so hard, and it's such a mistake. Because if you convince yourself that this market is going to go to zero because Trump is, you think he's a big old idiot. If that's your opinion, fine, but leave it out of your trading, because the market can still go up under Trump. It did incredibly well under Trump in the last time. And guess what? It also did incredibly well under Biden. It's not about your politics. The market tends to go up when you have, it's not just the president. That's what I'm saying. So when you're looking at this market and you say, okay, people are fearful of major economic recession, and you get a number like this, that's kind of just, you can't ignore that, right? A lot of people will ignore this. They'll say, oh yeah, no, but Trump's still going to wreck the economy. People did it under Biden too. So I'm not here just defending Trump or just defending Biden. I'm saying leave them out of it for a second. Just look at the data. The data is not suggesting right now, and this could change, but right now we're not seeing massive recession, brink of disaster stuff. Let's get a reality check on this stuff. Can we do just a reality check on the economic data for a second? I think we need that more than ever right now. Right? Let's look at the data. Can we just ignore politics for 2 seconds and just say CPI is at 2.4%. Unemployment rate is at 4.2%. Those are great numbers. And they've been great numbers. I'm not saying those are great numbers because Trump saved the day. No, they were good under Biden. We made a lot of progress. Powell and team did a remarkable job, in my personal opinion, given a pandemic, an invasion of Ukraine, inflation like crazy. I think they've done a relatively good job given the very difficult task that they had at hand. And here we are, unemployment rate at 4.2, CPI at 2.4%. Right now, seems like a pretty soft landing to me. Now that could change, right? The thing is, the future is untold. We don't know what happens in the future. Maybe the tariff stuff does cause a big recession, but I'm not a big speculative economist. That's not what I do. I trade the markets that we are living in today, and I may look into the future a little bit more in depth if I'm trying to invest long term, but I'm mostly looking to trade actively. And so, here's the environment, right? The environment's been pretty solid for the last 2 years. We've had a really good last couple years in the economy in terms of inflation coming down, unemployment rate staying strong. As far as I'm concerned, these two things are like your biggest indicators on this list: unemployment rate and CPI. And the reality is they're in pretty decent spots. Could the economy get better? Sure. Could it get worse? Definitely could get worse. But right now, that's the environment that we're in. So when I look at like stocks and people freaking out and saying, oh, certainly we're going into a recession, all this, I just don't. People have big opinions and they're often wrong. People have huge opinions on everything. But I just found in my trading, what helps me the most is to stick to the data. And I put a lot more emphasis on the hard data, even though many people would accuse me of, lagging the forward indicator stuff. But the forward indicator stuff is not always right either. The future is very hard to predict in markets. So I do rely heavily on backwards looking data to give me the facts, not trying to, a lot of people have like a very heavy bias about what they see happening in the future. That's the difficulty with future looking stuff, is there's a lot of bias in there. And people are inherently not good at predicting the future. It's very hard to do. There's an expression, I'm going to butcher it, but it's like predictions are very hard, especially when they're about the future, and especially when it's about the economy. It's just a very difficult thing to predict. So I don't try to play that game. I don't try and predict, where the economy is going to be in 6 to 12 months. That's a very difficult game to play. So I'm looking for the environment we're in doesn't look as disastrous as the news headlines. To me, there's opportunity to the upside if price action agrees. So I look at the fundamentals, and the fundamentals overall look decently okay in terms of those two key statistics. But I'd like to see some better data Also, we didn't get our latest retail sales number. That didn't update there. Hold on, I need to immediately retail sales. Also, guys, we mentioned it earlier, but we are going to be answering some questions here in just a minute. If you have a question, if a trading related question, we'll drop the link here in the chat to where you can ask that. I'm going to pull up the live stream schedule just because I need to make sure. I believe we have people coming on at 8:45. Yes, we got Miko and Marco coming on in 7 minutes or 6 minutes. So we'll do some questions really quick. If you had questions, drop them in here. This is what I'm working with now. So I built this overnight. It's just a way for me to pull up and review some of the questions that you guys have without doxing your emails like I did to Alan. Sorry, Alan, by the way. I hope you got like some nice emails yesterday. So we'll do some questions in just a second. Let me just reiterate real quick. If you want access to the Edge Finder sale is ending soon. It's our biggest discount that we do all year long. It is currently 45% off for live stream viewers. If you do not have a copy of this tool and you're like, yeah, I eventually want to get that, here's your chance to pick it up at a super low cost. We're currently doing 45% off for live stream viewers right now. We'll drop a link really quick in the chat to where you can speak directly to our support team about getting access to that extra 5%. So we're doing 40% off, but for live stream viewers right now, we're doing an extra 5% off if you message in at this time. So send us a direct message using this link. You'll be connected to a member of our support team who can get you some information on the Edge Finder and about our 45% off sale. The other thing is some people are like, can I pay with crypto? The answer is yes, just chat with us. And then other people are like, can I pay in installments? And the answer is yes. Send us a direct message. We have a great support team who is able to answer pretty much any question you have, give you some pricing options, split it up into payments if that's easier for you. They do a great job and they help a lot of people with making the Edge Finder more accessible. We want more people using it than ever this year. Our goal is to get it into the hands of as many traders as possible. And to equip traders with the type of stuff that institutions are using, right? Institutions are using economic data screeners and COT data, and they're looking at market sentiment and the put to call ratios. They're using this stuff, and the average retail trader is simply not. So our goal as a company is we build some of these really cool tools, and we use them, and we share them with the everyday trader. The game, the playing field is leveling here between institutions and retail. And I'm absolutely super excited about that. Okay, questions really quick. Let's see what we can do here. Vijay says, been trading for less than 1 year, looking to learn more about fundamental analysis. Owns some of our software, which is awesome, and says, what does the NAS 100 futures in showing up 1% today? I assume you're just asking like what's causing this. And honestly, I haven't really looked at the stuff here. Yesterday, there was a huge sell-off intraday. It doesn't look that huge relative to all this crazy recency stuff. Had a nice up day yesterday. And I do think that this is just a kangaroo market. We're chasing headlines constantly. One day we're up, one day we're down, and we're getting used to, this is crazy. We're getting used to 3-4% down days. And then, a 1% up in the morning really doesn't mean anything. Over here, that meant a lot. Over here, that means pretty much nothing. So I really think from a confirmation perspective, we need to see NAS break back confidently into the 19,000s. That's personally what I'm looking for. Next question is from Graham. He says he's been trading for less than 1 year. His goal right now is to become a funded trader. Owns some of our software, which I appreciate. Thank you for your support there. And I hope the tools are treating you well. And their trading question is, any tips to help with patience when no trades are setting up for your strategy? Very good question, and also very relevant to me right now. I have a lot of stuff that I want to be trading that I just can't get some pullbacks on. Like I want to be long euro dollar. I want to be long pound dollar. I want to be long Kiwi dollar. And meanwhile, there's no trade setting up. So I'm very much waiting myself. So there's a couple currency pairs. I'm also watching for that NAS breakout. So I have a lot on the radar here for me, but nothing really kind of at the ready. And that can feel really frustrating. The biggest thing I can tell you is You just have to practice getting used to sitting on your hands. Sometimes taking no trades really is the best strategy you can possibly take. Gareth has been trading for 3+ years. Their goal is to learn more about fundamental analysis, and they're wondering interest rate cuts and your thoughts on the DAX. So the DAX, trading in lockstep with most other indices this year, had a big spur on the increased expectation for military spending in the European region. A lot of that spending is expected to stay domestic for European military companies. So, I think that the DAX, I think that there was a trade here. Like there was like some clear, dominance, people exiting US, buying German stocks. My personal opinion, if I were to pick between the DAX or the NAS, I'm picking NAS right now for sure. I think you've had some good sell-offs in this. I think that trade negotiations will progress in coming months. I don't think that the world is going to collectively agree to go into a trade war. That's my personal opinion. We saw this in 2018, and although it got uglier before it got better, there was resolutions that eventually come to the table because most economies and leaders know that a prolonged trade war just hurts everybody. Like it's really painful for everybody. It's just like a standard war. Like there's no real winning in war. It's just you lose less than your opponent. Kind of the same thing for trade war. So I think that there will be some positive negotiations, and I still think that the U.S. will regain kind of its dominance. I don't think this is the end of U.S. kind of leadership, personally. Let's see. Torfik says, my goal is to become a funded trader. And their question is, how do you deal with losing 5 trades in a row? Great question. And thank you again for the question. I appreciate that. The answer, I would say, losing 5 trades in a row, if you've done your back testing, you should know approximately what a losing streak should look like for you. And 5 trades losing in a row for me is actually quite normal. Sounds scary, but it's only scary if your position sizing is too big. I would encourage you to do some back testing, study your experienced drawdowns through those back testing. And what you'll find is that if you test most strategies, even great strategies can have losing streaks of 5, 10, or even more trades in a row, especially if you're using a tight stop loss. If you're using a tight stop loss, you're going to have losing streaks. It's just part of the game. Like if you choose to put on small risk per trade, guess what? The consequence is you're going to have lots of losing streaks too. And that's okay if you've done your back testing and your size is not going to crush you. If 5 trades in a row is going to crush you and you're using a tight stop loss approach or like a 2-to-1 or a 3-to-1 risk to reward, you are just going to experience an account blow up if your position sizing is too big, because 5 trades in a row is normal to lose. Like it doesn't sound like it. Most people won't talk about that on social media because it's not very exciting, but it's a reality that I've found in almost every trading strategy that has tight stop losses. Okay, last question here, and then we're going to pass it over to Miko Marco, who's going to be joining the stream. We'll stay tuned for that. We got Ermaeus. 1 to 3 years is how long they've been trading. Do you own any A1 trading software? Not yet, but I'm interested. Awesome. Send us a message if you have some if you'd like some more information. My question, Nick, is as a swing trader, I passed funded challenges, but I encountered a consistency rule, of 15%. Can I make it work as a swing trader? I don't know exactly what you mean by I encountered a consistency rule of 15%. I imagine that's something specific to a certain prop firm that you are trading with or a funding company. I would encourage you to just look into that further. And really the best way to answer that question would probably be just to spend some more time back testing and see if what their rules rely on meet your trading criteria. I really encourage everybody who is looking to get funded to really make sure that the challenges that you're looking to take fit in line with your trading strategy. If you're a profitable trader, you shouldn't have to bend and break your back to what a prop firm wants. You should just find a prop firm that fits your style. Okay, guys, up next. Thank you, by the way, for the questions. That was fun. I enjoy doing those, and I think we should do more of them in the future. Actually, keep the questions coming. Maybe if anybody has questions for Miko and Marco as well, maybe we can just toss some questions towards the end. That was fun. I built this cool little dashboard here overnight, and your questions will populate on the screen here, and then we can take a look at them collectively. So up next, guys, we've got Miko and Marco who are going to be joining the call. And like I said, drop your questions while we roll this quick ad break. We'll be right back. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, and we're back with Miko and Marco. I know you guys saw me doing that little session that I just started doing yesterday. It's kind of fun, just taking questions from the audience. I'm sure maybe we'll get some that we could take a look at together towards the end of the stream. That might be fun to try. In the meantime, definitely want to get you guys' thoughts on some of the stuff happening in this crazy market. Every week we do this session on Thursdays. We talk technical ideas, and it seems like every time we have like a blank canvas of craziness that's been going on in markets. So maybe we'll just jump in first by asking you guys to do your chart of the day. Marco, trade of the day, chart of the day, current trade for you. What's most interesting to you right now in terms of a chart?
Yeah, for me, it's going to be gold.
Okay.
And
are you still riding this, Marco?
Yeah.
All right, let's go.
Yeah, I'm still trailing it. Not on the 1 hour chart, but more on the 4 hour and daily. So my stop loss is, I think, somewhere around this low right here. Mm-hmm. I'm trying to leave some room because the market environment is still pretty risk off. So this could still continue going up. Why is this my chart of the day? Well, because on the daily chart, it looks very impulsive. Okay, now it's retracing just a little bit, but the last, let's say, 10 candles have been really interesting, and there's a lot of momentum behind this. I mean, if you're a swing trader, currently it's a very risk-off environment. There's only a couple of things you can trade. That is going to be gold. That is going to be maybe going along the Japanese yen, but the yen pairs are kind of struggling now a little bit, or going short the dollar. That means going long euro dollar or the pound dollar. So you're kind of limited right now. Not a lot of things are moving. The strongest one for me is going to be gold, and the chart of the day is going to be gold. I would like to see it pull back a little bit because, I mean, this chart just looks, even on the 1 hour, it looks really strong and maybe a bit overextended on the daily. Definitely a lot of momentum. So maybe a pullback could happen. And if we do pull back a little bit, like this, maybe to this level of support, and then get a bit of a bounce, an entry like a flag or a break and retest, I would be happy to look for some possible scale-ins, or if I get taken out of my position and if price retraces a bit more and then bounces back and I get the confirmation from the edge finder, I'll be very happy to look for some flags or break and retest setups to get in on another buy setup. So my main story right now is the risk-off environment. Not a lot of movement in terms of tariffs. We're kind of possibly waiting for that 90-day pause to let's say pass, and then we will get some more clarity. And that's about it. So gold is the best.
Very nice. Yeah, gold is absolutely just tearing to the upside. And I put out a chart yesterday just on my socials. So far this year, not very glamorous, but I'm up about 1% on my account, which is not great. But considering a large part of my account is also like swing trading stocks that I like, which have gotten crushed, I'm feeling okay. Like I'm up 1.2%, actually probably a little bit more today with the bounce back in stocks. So maybe let's say 1.5 to 2%. And so I'm feeling like, you know, you kind of have to count your blessings in a year like this. This has been a volatile, crazy year. Everything's moving so violently. So yeah, gold has definitely played a big part Me personally as well in this year's kind of holding it together year for me. I mean, it's not by no means an amazing trading year for me at this point, but it certainly is a holding it together year, which you're going to have those. So we'll see how it all plays out. Miko, if you don't mind sharing your screen, I'd also love to hear from you in terms of chart of the day. You've just had movements on all fronts: dollar, yen, metals, indices. Definitely curious to see what your chart of the day is.
And I would say you should be pretty happy, Nick, that you got all of these stocks at a massive discount. So although it currently looks pretty bad, I mean, you're getting at these amazing prices, and it's going to bounce back sooner or later.
I think
and
long
then you're going to
term,
be,
I think
can turn out to
long-term,
be
you're
your
getting some
biggest
good
fear.
options.
Yeah.
All right, Miko, what you got for us? You got gold too?
Yeah, I mean, actually, I was actually going to do gold, but then market did gold, so I'm not gonna.
Fair enough.
But
your second chart of the day, then I guess.
Yeah, second chart of the day. I like pound USD longs as well.
Okay.
I've had my eyes peeled on buying the USD majors, so pound, Aussie dollar, New Zealand dollar this week, but they've just been flying annoyingly. So I'm kind of waiting for a pullback, and pound USD probably looks the best to me. It looks like price is looking to head towards 1.34. We had a really aggressive sell a couple of weeks back, and then price has completely erased all of that. So now I'm just looking for a pullback of this bullish move to continue the buys back into the high. USD still looks really bearish to me as a whole. It might be due a bit of a pullback soon, which would be good because then that could help pound USD pullback as well. But yeah, I'm looking potentially for the retest of the daily high here at 1.31 for a buy, or if we come a little bit deeper, 1.3 as well. Some prior resistance there too, which I like. So I think because of how much momentum there is in the market, probably we might see this as the best case scenario. We might not get that bigger sell, or at least not yet anyway. But yeah, pound USD looks really bullish. A lot of momentum in the market, healthy price action. We've taken out these highs as well. So if I can find a pullback to either one of these areas, we'll be happy to find a buy, and potentially 1.34 on the horizon.
I like it. And I had a question for you too in response to that chart, Miko, with the pound dollar. So let's just say, so you mentioned it's moving real strong, lots of momentum to the upside, and you're looking to be a buyer. Let's say you take that first attempt. Would you, and this is how I typically do it, is I treat it like a quote unquote campaign where I'm taking multiple attempts because entries are just hard. In my experience, no matter how long I've done this, entries are just difficult to get right. Timing is really difficult. So what I'll often do is I'll take an initial attempt with a stop, and then a second attempt and a third attempt. That's usually like, I call it a campaign because I just refuse to believe that entries are easy. Everybody seems to, love to think that they have sniper entries all the time on social media, but in real world times, entries are hard. I don't know about if you guys feel the same way, but I struggle more with entries than I do with exits. I feel like I'm pretty good with exits, but it's entries. Entries are the harder one for me personally. So I'm curious, how would you approach that idea, Miko, from like not just a single trade idea, but from a, multi-trade, or like, what would you be looking for in order to potentially try more than once if you had to?
Yeah, so I completely agree, because essentially with an entry, you're trying to pick a bottom, or essentially where market is likely to do something. And that could happen anywhere because we have limited information. So based on that information, we're trying to predict where the market's going to do something. And yeah, it's going to be very difficult to get that right. And of course, a big thing as well is stop loss as well, because if you have a very wide stop loss, maybe your entry doesn't matter as much. But if you have a tighter stop loss, well, then the entry becomes very important, and potentially you might take a few more losses based on that. But yeah, with this pound USD idea, the idea is that there's a lot of momentum in the market, we're likely to continue up. And these two areas look good to me as an area where we might buy and continue that move. So I will bet the same risk on both opportunities. If price was to get here and I see a valid opportunity to take a trade, I'll get involved. If it doesn't work out, then this is the second area, and I'll do the same again. If things look good, meets my criteria, I'll take the trade. But it depends on the opportunity. Sometimes there's only one area that looks good to me, so there's only one opportunity. Sometimes there might be three. And I'll kind of treat each level with the same attitude, that each one of these levels could be the level that does give us the room to the upside. So with my entry, it does depend on the circumstance, but what I normally do is I have a bias. I expect price to get to maybe X in terms of price, and then I'll spot levels that meet my confidence, and there might be 1, there might be 3, and I'll treat each level as they potentially could be the level that does send price higher or lower.
That's a great answer. And, even one level, right? So like, here's something to think about. And I want to ask Marco to weigh in on this too, because entries, again, I think this is probably one of the most valuable conversations we could have for the average listener, because what do we all learn? Like when we first look at YouTube, everybody's like, this entry strategy is going to make you rich, right? Or like this one strategy, this one timing indicator, or this one, price action pattern. And I think we kind of have to destruct that a little bit, in my personal opinion, because entries are just so dang hard and they're never going to be easy because of the nature of the market. The market has so many factors that are making price move that it's just going to be hard to get the entry perfectly correct every time. Even if price action looks perfectly well, what if Trump comes out and tweets something, or Powell says something? Like, there's just so many things that can offload a trade. So like, let's just say, for example, that there's this idea and we like pound dollar longs here, and this happens and you stop out. But then what if the market actually starts to climb back and regain that area? Maybe I might actually enter the same area once more now that price action. So we could even have the same level produce more than one entry for me personally. Like I'll oftentimes, if I see something like that, like we fake out, I get stopped out, and we get this kind of move, I could actually re-enter and try that same level again, as long as I still like, for me personally, the fundamentals of the trade and the technical overall trend. So just something to think about. The last thing I'll say, and then I want to ask Mark about this too. Entries are harder, in my personal opinion, the lower the time frame you go. So if you're looking at like a weekly chart and it's like a really obvious level that many traders might be looking at, I find that to be a more, and again, also what that goes with is oftentimes a larger stop loss, a wider, room for error. So you don't get those trading opportunities as often, but I find those to be a little easier in terms of entries than like trading on the 15-minute chart. Trying to time entries gets very difficult because there's just a lot of noise and blips in both directions. So Marco, what do you think on entries? And like, let's just say you have a bullish or a bearish perspective on a chart. How do you map out not just one trade, but like, would you attempt a second or a third? And what would the criteria be in order to do that?
So with the example of the pound dollar, since the pound dollar is currently getting a bullish reading on the edge finder, so let's say I do have those levels lined up as you guys have. So let's say the first one is right here and the second one a bit lower. Okay, and then we go back to the 1 hour chart, because that's where I look for the little entry patterns. If I had a bounce right there in a flag formation, and then I took a long, let's say, right here, and I got stopped out, I would be pretty happy to take another stab at it and then try this again, something like this, take another buy setup. But for a third attempt, I don't think I would take a third attempt. I think 2 attempts is the maximum for me at a specific time and a specific level. So let's say this all happens in 1 or 2 weeks, then that's okay. But if you got a third entry, so let's say we got another drop in the following week, I would not get in another setup. I think 2 attempts at, as I said, the specific level and time is my maximum, and that's my tolerance, my personal tolerance. But I don't actually find this to be too hard. What is the hardest for me personally is if, let's say, I'm seeing gold flying to the upside and I'm just not getting an entry. So let's say I didn't take this break and retest, and I just see the price flying up without any flags, without any clear break and retests. That is the hardest thing, because I'm really getting tempted to just go in with a market order, That battle between not following the plan because you think it's going to explode up and actually waiting for your setup, which may never form. I mean, you could get just an explosion up and you never get a high probability entry formation. That could happen, but you must, of course, stick to the plan. And I was getting frustrated. I just recently bought some more S&P, and I wanted to do it with a limit order, not the market one, because you get a bit of a better price. And I kept putting in the limit order for like 15 minutes, and it was just not getting hit. But again, my plan was to go in with a limit. So you must sit there and wait for the actual limit to get executed. It's the toughest thing for me is not catching the price.
Yeah, and that's the thing is, to each trader, there's kind of like that thing they struggle with most. So you're kind of outlining like a FOMO of like a one directional market, which is really relevant, I think, to a lot of traders right now. I mean, Miko, you mentioned that too. There's the same thing here. Like there's a lot of stuff that I want to be in, but no pullouts makes it real challenging to find those opportunities. So yeah, it's to each their own. Like everybody has their trading psychology. Some people just simply can't stand like drawdowns, like any amount of drawdown or losing streaks, like sends them, they totally like collapse on that, which is a completely understandable one. But I think I'm with you, Marco. Like what I struggle with more, like some people struggle with winners too. Like there's so many things. Like some people struggle with like, I got to close my profits. I can't stand having this trade opened. So yeah, I mean, everybody has their thing. For me personally, FOMO is a big one too. Like I actually can handle drawdowns because my sizing is not huge. Like I feel like I've gotten pretty decent at handling drawdowns, but it's like FOMO is like the biggest one. So I want to ask Miko, same question. Just a second. I just wanted to shout out a member of our regular community, just picked up Discord VIP and got a copy of the Edge Finder. Bala, I really appreciate it. You've been supporting the show for a long time, and thank you very much for picking up a copy of the Edge Finder. Please hit us up anytime if you have questions with your new tool. That's super exciting. I'm excited for you. And again, thank you very much for your long-term support of the show and for picking up a copy of our work. That's awesome. Let us know if you have any feedback, ways we can improve it. We're always looking to do so. So Miko, same question to you. So Marco and I are kind of on the same camp of like FOMO is the thing. That's the thing that gets us. What's the thing that gets you? Like, what's the because nobody's a robot, right? Everybody says, oh, trade like a robot. But like, what's the thing for you that is like the thing you're constantly working on psychologically with your trading? I'm just curious.
Yeah, it probably would be a similar situation. Like when I do have a trade on, and maybe there's some news coming out or whatever, the markets might be volatile. I find myself pretty calm, to be honest. Like I've accepted the risk and I'm not really too bothered necessarily about the outcome. But if there is a trade coming and I know there potentially might be some news later and I might not get the entry, that does potentially make me a bit restless because I want to get into the trade, but I know that the news potentially might move it without me as well. So that does frustrate me as well. And I probably would say if I was like on a losing streak of maybe like +6 or 7, I will be a bit more cautious for my trading as well. I do find myself I'll take less trades because I just don't want to make the drawdown worse. So I do like to be a bit more cautious and reduce my trade frequency and then slowly build it back up again. So I would say between 1 and 5 losses, I'm pretty fine. 6 and 7, I do get a little bit more cautious for my trading.
Yeah. Miko, what I want to highlight about what you just said, I think people might have easily looked past what you mentioned about like, oh, you're not too worried about open positions. Guys, we're all human. And anytime you have a big position on, I don't care who you are. You could be Warren Buffett. If your position is way too big, that's going to impact you. Miko has been doing this for some time. Marco has as well. I have as well. One of the things that I realized a long time ago in the journey, and you guys clearly have too, Miko, you expressed that really well. You don't turn off your emotions. You just reduce your position size. Like that's the thing so many traders struggle with. Like too big of a position will make you obsess over a trade. If you're getting up in the middle of the night, staring at charts, if you're worried about every single little movement that's happening in the market, Look, the reality is your position size is inappropriate for what your risk tolerance is and for what your account size is. That's the reality. Everybody who is struggling with that in the audience, that's a big one, right? Miko, Marco, and myself didn't mention that because I think all three of us have done this long enough to realize like the only way you stay in the game is small positions. And so like, I think like that for people in the audience who might've been like yelling at their computer screen, like, well, how do you deal with the emotions of trades that are going right or wrong? The answer is your size is too big. If it's making you worried, if one trade is making you too worried, that trade is an inappropriately sized trade. That's the answer I think a lot of people would benefit from. Because again, Marco, Miko, you guys both just expressed completely different topics because you got past that point. Like we're all three of us are past that point.
Yep.
We're like, okay, yeah, no, you can't have stupid size. Like, Marco, do you have anything to add to that?
Oh yeah, I mean, when I was starting, I had a trade on. I was literally waking up every 30 minutes. Not with an alarm, I just couldn't go to sleep. I had the phone by my bed, and every 30 minutes I was opening the phone, MetaTrader, how are the positions doing? They were not doing good, so it was a pretty bad night.
Yeah.
And then after that, I said to myself, this can't go on. I mean, this is crazy. So I put in some processes in place and lowered the risk, of course, not to have that sort of thing happen again, because at that point, you're just not going to be able to operate at a good level. Your psychology will be basically shit, and you'll probably execute some very bad setups if you cannot sleep because of your positions.
Yes. I mean, the thing is, people ask me all the time, and Annie, I want to answer this because this is really relevant to what we're discussing. For a 20K account, is a 0.1 lot per trade with 2% risk appropriate? So you know what the good answer that I think I could give you would be, you should probably back test and you should size appropriately to what, your normal drawdowns look like. And you should maybe probably consider dropping it down to 1% or less per trade. Like I could give you that answer, but do you know what the God tier answer is? In my opinion, the God tier answer is your gut feeling, your emotional response to your size. That's the real answer, because nobody can give you the right size for your account, because some people are willing to take risk. Other people are way more like, I need this thing to be real slow and steady. I want to be here in 10 years trading this stuff, and I want small size and I want stability. So listen to yourself for the right position size. That's the God tier answer, I think.
Mm-hmm.
So I don't know. Miko, anything else? Position sizing, stability, for people who are struggling with that, what do you think?
Yeah, I think it's just it depends what your goals are, because like I have a conservative account, I have aggressive account.
Mm-hmm.
With the conservative account, we're trying to be here for the long term. The aggressive account, we're trying to generate as much as percentage as possible, but we fully understand that the drawdowns are going to be big and potentially could even blow the account as well. So if your goal is to try and grow it as fast as possible, well, you have to be prepared to lose it as fast as possible as well. If the goal of that account is to slowly grow it and still be here next year, 5 years from now, well, then you have to allocate risk which aligns with that. So I would say whatever your goal is, find that out and then plan your risk according to that.
Yeah, no, I mean, those are great, really important answers. Because again, I think that's the stuff that people need to hear is like, your risk tolerance. And that's a great point too, Miko, about the idea of like having a aggressive account and having like your super conservative account. I think that's just like wisdom. I have that too. Like my main account, I'm pretty risk adverse. But then in smaller accounts, I might go a little bit more aggressive. But aggressive still doesn't mean aggressive for me is like risking like 1 to 2%. Conservative for me is risking like 0.1 to 1% per trade.
Mm-hmm.
So it just depends.
Mm-hmm.
Like I have a really low risk tolerance because that's the other reality is like some people are trading on prop firm accounts and they want to keep those accounts. So they've reduced their risk dramatically down to like 0.1, 0.25% per trade. And I think that's wisdom. Like I think like see what happens. I've been saying this a lot in my videos recently and my streams and stuff. For anybody who struggles with position sizing, just try reducing your position size to minimum size for 1 month and trading it and just watch what happens. Your psychology will be in such a better place and you'll be like, whoa, trading is completely different and I'm bored. And that's the good thing. You want
Yeah.
trading to be boring. So,
And also it goes up the risk tolerance. Like the best of traders at professional prop firms, they start with, I think, $1,000 is their daily max risk, and then they go all the way to maybe $100,000 in 5 years, you know. So as you experience losing those amounts, you tend to tolerate bigger losses with years. So I would say my risk tolerance has definitely grown from what it was 2 years ago.
yeah. Yeah, and again, it's a personal thing. Belen says actually you need to feel the position size. In order to feel it, we need to consider the money we risk as a total loss. That's a crucial part. So I think there's like a middle ground, right? Like I think it's not black or white where you're like you want it to be completely almost like trading a demo account where you're trading. I'm just saying like just see the contrast. If you try it for a month where you trade minimum size, just feel that difference. And I'm telling you, like it's an amazing difference and clarity to your trading. You're just like, I'm focused on the trade quality. I'm not focused on the P&L. And that just really changes things. You'll start finding yourself taking a lot better trades. Anyways, guys, we've come to the end of this segment. I want to thank both of you guys. That was an awesome session. I love doing these kind of conversations around trading segments. I know we do a lot of charts usually, but today we really got into the psychology and to the strategizing. So I think that was good stuff. So Miko, Marco, thank you guys very much for coming on. Before we kick you out of here, for everybody who enjoyed those comments from these guys, make sure to go support them on their own YouTube channels. We'll be dropping the link here in the chat to where you can find Miko and Marco on their socials. Do us a big favor here. If you enjoy the A1 Trading Show, the biggest thing you can do to help us grow this show is to contribute by helping out our guests. We bring these guys on every week. They add tremendous value to what we're doing here. Let's show some love. Get people to go subscribe and check out their content as well, where they're sharing even more free value. So you can find them on YouTube. It's at Miko Audu on YouTube or Marco's Trading Journey on YouTube. I don't think we dropped the links here. I think we might be, our producers backed out or something. They might have dropped the call on accident. Anyways, we'll get those in there as soon as we can. I think Chandler just jumps back in, but we'll get those links here in the chat for everybody. Go find them. Go search their names. Miko Audu, Marco's Trading Journey. We'll also drop the link here in the chat. Thank you guys very much for coming on.
Cheers.
Thank you.
Thank
See you.
you.
All right. See you guys. Also, just wanted to react to some drama here just before we switch over to Forex James. So let's do the drama. Okay. Igor was unhappy, saying that why would you buy the Edge Finder when you could do it all in an Excel spreadsheet? And that, I'm not even gonna lie, that is like straight up rage bait to me. The tens of thousands of hours that have gone into building out the Edge Finder to automate the process, to make it an easy tool for traders to test stuff. If you can build the Edge Finder in 3 hours and prove it to me, then I'm just gonna be baffled. But you definitely cannot. We have there's 3 of us, professional developers, building out the tool every day for 3 years straight to build it into what it is. So you definitely cannot do it in 3 years. And also Ballout mentioned he, bought the products because he's a busy dude. That's the whole point of what we do. We automate a lot of the data for people who are busy, who still want to keep an eye on a lot of data at once and don't want to spend countless hours writing code themselves to try and build stuff. So, if you don't like the products, totally cool. Igor, the negativity, man, it's got to stop. You might be on the verge of banning pretty soon here if we keep it up. If you don't like the tools, totally cool. But to build it in 3 hours in a Google spreadsheet, come on, that's just silly. There's a little bit more effort that went into it than this. Anyways, Chandler also really is not cool with you, Igor. I'm going to warn you right now. You do not want Chandler on your bad side. I've seen it. Those people don't last long. Anyways, guys, up next, we got Forex James taking over. We'll drop the link here in the chat to also check him out. You guys know him and love him. He's a regular contributor to the A1 Trading Show. And also thank you guys to the supporters of the Edge Finder in the chat who recognize our work and effort that goes into these shows and streams and all that stuff. Anyways, up next, Forex James. Stay tuned. We'll be right back. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Well, rest in peace, Eagle. You had a good run. Hope everyone's well. It's Thursday. We had the European Central Bank cut rates this morning, and we had jobless claims come out slightly lower for the US dollar. I'm just going to take some time and just show you what I came across today. So I was looking at some bank reports, as I normally do. So we do have the UK CPI set to accelerate in Q2. We're not going to go into that just yet. But what I want to show you here, so this was sent out by Goldman Sachs. So they have recently increased their end-of-year forecast to $3,700 an ounce, and that's based off ETF holdings and central bank buying, with obviously risk skewed to the upside. We all know the markets are risk off at the moment. Now, the interesting thing is in the tail scenario of the Fed subordination changes in U.S. Reserve policy, they could forecast 4,500, and this is by the end of the year. So it's the end of 2025 target on gold. So initially, this is their first target, and this is mainly based on if nothing changes. So if we don't see any huge escalations, we don't see a massive loss of confidence within the dollar, we don't see massive quantitative easing, we don't see a massive risk off move, such as, you know, another pandemic or a huge war breakout, 3,700 could quite easily get met. However, that doesn't mean 4,500 isn't possible. I'm not going to target 4,500. There's not, you know, I'm not going to sit here now saying I'm going to target 4,500 for the end of the year. I think that might be a little bit too optimistic for gold prices, but it's, you know, definitely not impossible. As I was saying on yesterday's stream, I remember being sat here with Nick a couple of months ago, and we were talking about 3,000. I was sending Nick an article. I was like, "Oh, I'll see you at 3,000," and you know, we've smashed 3,000 long ago now. So yeah. Pay attention to gold. I think it's still got higher to go. Now, I would expect some profit taking. I wouldn't say it's going to be like a huge crash or a huge downside move, but just some sort of pullback here would make a lot of sense. We've not really had a major pullback. I guess back on the 8th, so 10 days ago, we did have a pullback, but since then, it's essentially just rallied. So I would expect some sort of a pullback from here. That would then allow price to come and meet this 200 moving average. It would also come into this fib zone with the 0.5 and the 0.618, aligning with previous structure. The RSI, excuse me, the RSI would, you know, ideally also become oversold. So it's technically a perfect setup if we can see something like this and then go higher. The problem is with trades like this, and I don't particularly like it because I like to have a hard take profit at previous structure. But with gold, we don't have that because we don't have previous structure. You know, we're creating all-time highs. So really, it would be a case of just trailing stops. And I would trail them quite loosely in this case, because if I did manage to get into gold, I wouldn't really want to get out until the end of the year. I'd be quite happy to hold on to gold for a significant period of time. So we'll see how this one develops, how it goes. But this is the idea for now. What else do we have on here? Let me just take a quick look. So Trump is working very hard with the UK to find a trade deal due to the importance of the relationship between the US and the royal family, specifically the king. We're also expecting the dollar to continue lower. So this is from ING. Conviction levels are high that exceptional US growth has been eroded and that the dollar needs to come lower. Some fear also remains of Washington trying to force trading partners to accept stronger currencies. Expect the yen and the Swiss franc to stay in demand this quarter. Yeah, that's pretty much it. We could also see the dollar So this is from ING. We could see the dollar to stall, go up to around 100.25, 100.5 before we start seeing it break even lower beyond the 99 level. Euro pound also expected to come down slightly with a slight retracement. But yeah, that's pretty much it in terms of notes I wanted to cover with you. Obviously, ask questions if you do have any. Let me just see what's going on here. Yeah, I'm waiting for a pullback on gold as well. I can't justify buying it right where it is. Ball out, Igor is gone. We have a fallen soldier, although I'm not sure he was a soldier on our team. Where's he getting this info? Jay, I'll tell you where I'm getting this info. So when you're as rich and as successful and profitable as me, this guy called Inner Circle Trader, also known as Michael, will come up to you and he'll say, do you want to join the real Inner Circle? Obviously, I said yes. And then he sends me these files every day of top secret information about where the markets are going. So, you know, it's just an infinite money glitch, essentially. Swessmore mines boggle me. Yeah, it's just different flavors for different people, I guess. No, seriously, they're just from bank reports. So we send them out in our Discord every day. We get them from the large institutions. I heard it a conspiracy, which made me laugh. I was showing a bank report to someone on Twitter, and they were like, "Yeah, it's made so they can manipulate you, so the institutions can tell retail traders where to go, so then they can use them and get their money or something along those lines." I'm not gonna go into that, but the reports are made for clients of that bank or that institution. So obviously they're not just putting them out on the website for everyone to get. It's a case of if you're not a client that's at that institution that's invested with them, you're not going to get the report. So it's like, okay, so they're using, you know, HSBC is using their own clients for liquidity. Okay, that's cool. Interesting for me. How much you want to bet you're going to close that gold trade at 1-to-1? No, Cedric, I've already explained the 1-to-1 thing. So I was doing 1-to-1s last month and this month because I didn't really have an idea on the markets. I didn't want to hold anything. But with gold, quite happy to hold gold because I've got a long-term view on it. The same thing as Swiss yen. I'm quite happy to hold that one as well. But when I've got no long-term idea about what I'm actually wanting to trade, I'll quite happily just take profits and get out and maybe re-enter if the short-term idea is still prevalent. Humiliation ritual to join? Yeah, unfortunately so. I'm not going to tell you what I did, but bad times. ICT got kidnapped for sharing the info. It's all right. I already got kidnapped. But mine was on a different level. You know, there's this beam of light in the sky and the UFOs came down and I was like, oh my God, got probed and everything. But that's a story for another day. We're here to talk about the markets. Anyway, let's get back on topic. So what are we discussing? So the European Central Bank cut rates by 25 basis points this morning. It's widely expected, or sorry, it was widely expected. So it wasn't a huge shock, but it has applied some pressure. Oil seems to be recovering quite well. I would still quite like to go short on. I'm just going to actually scrap that. No, I don't, because the edge finder's changed, doesn't have oil at the moment. So we've got Aussie US dollar as the most bullish reading. We've got euro dollar at 10. The FTSE does seem attractive. And this is what I was going to mention earlier, actually. If we go back to what we were looking at here. So we've got the UK CPI set to accelerate. So that tells me the Bank of England is going to struggle to cut rates further. However, we did have lower CPI come out already for the UK. I think it was yesterday we had lower CPI come out. So I think it was 2.6, previous was 2.8. So I'd quite like to get long on the FTSE short term. So something maybe just back up to these previous highs, then start looking to go into a short position later in the year towards Q2, Q3, or sorry, the end of Q2, start of Q3, and looking to short the FTSE probably back into these lows. So we'll see. That's planning 2 trades at once, which I'm not very good at multitasking, but I think something maybe along these lines. Obviously not the entry here, but you get the idea. Yeah, something maybe a bit like this. So we'll see. Sean, I've got no idea who Edward Nigma is. Maybe I'm being ignorant there. Cult entry? Yeah, it is. With gold, can't you have small positions? And with every drawback, keep adding more? Yeah, that's the idea. There's one more very important point. The analysis and evaluations that Nick and other both in making advertisements are worth many more times than the price. It's very true. I think the good thing actually about the way that these streams are structured, you actually don't really need to even buy it if you can't afford it, because it's very frequently shown on stream anyway, especially the top setups. So you can basically just watch the streams and you've got the edge finder anyway. But obviously, if you're trading independently, it's a useful tool. Oh, I see, Sean. Your IQ is a bit higher than mine. What do I think of silver? I would also like to buy silver. Oops, that's the wrong one. Here. Yeah, I would also like to buy silver. It's just not really there yet. So I'd like to see a break and retest of this level. So obviously we've got previous low, previous high. So a break and a retest would be great to continue higher. Or a 50% retracement, which would also actually be quite nice. So that would come into, again, you know, we've got previous lows here, we've got some previous highs as well. So yeah, if we can see one of those two situations come, I'll quite happily buy it. Again, I think it's on the edge finder actually. Yeah, not too high. It's a bullish reading of 5, so it's not overwhelming, but I would quite happily buy silver. I think it's undervalued. I've got a friend actually that bought silver at $20. And I've been really, really jealous. I'm a bit annoyed he didn't send me a signal for that, actually. But yeah, I think if I can find somewhere to buy silver at a large discount, I would quite happily use that as a long-term position. But yeah, we'll see. What else do we have here? Euro dollar. I think we could get into a nice long position on euro dollar. I spoke about this one yesterday. It's not changed. But if we could see ideally this 0.618 level, which would lead us into previous structure, again, a very simple break and retest would be formed here in an ideal world. So we reject here and use this as a retest and then continue higher. I think with the US dollar deteriorating over time and the euro pretty stable, I wouldn't say there's anything that's necessarily great about the euro, but it's stable, so it's fine. We've also got liquidity flows out of the dollar that are going into the euro, which is obviously beneficial. So yeah, as I was saying earlier, we could see the dollar come back up slightly, not too much. I wouldn't expect to start flying off here, but some pullback to structure, whether it be here and then we come lower, or here and we come lower. Either way, I think the dollar is set for more losses this year. I just don't really see anything really that's going to change that. Now, I know Trump wants a weaker dollar, but then the question comes of how weak does he want the dollar? Does he want the dollar to sit around 100 to 99? Does he want it lower than that? Or, so we'll see. He's also said some pretty negative things about Jerome Powell. I think it was today or yesterday, he said that Powell needs to be gone and Powell should have cut rates a lot sooner than now. Ball out, you think 95 to 97? Let's see. I'll be honest, if we break through here, so below 99, I would see the first, let me see, here. It's tricky. I say here, we've got here, we've also got here, and then the next stop is down there at 89. I mean, this is the monthly chart, so we'll see. But Yeah, I think if we do manage to break down, we've got pretty much free money really to go long pound dollar, euro dollar, Aussie dollar, long gold. Oh, it'd be the 61.8. You know what, ball out. I didn't even check the fib. Let's see. Oh, we're at the 61.8. Oh, interesting. Maybe the dollar will rally from here. Who knows? Huge USD bull about to come, so any XXX USD pairs are about to be bearish. What makes you say that? Cedric, yes, I have. Didn't work out too well. Made me very, very anxious. Let's just say that. Oh, dollar yen. Again, this has been on the watch list for a while. I'd love to get an entry short on dollar yen, but it just doesn't seem to be happening. The net short positions are still at record highs. So it would make sense to get some sort of short squeeze. So if we can get something just to drive the market up by 50%, then we can start looking to take the market lower. That would be, you know, that'll be a French kiss. Beautiful stuff. But yeah, I don't know if we're going to get that. Trump can't fire JP. Yeah, I know he said he wouldn't, but you know, Trump seems to do what he wants to do. So, so yeah, we'll see. I know I don't know. To be honest, though, I think it's interesting if Trump can send the S&P and the NASDAQ and stock markets crashing down and JP doesn't flinch. Why does he think China's going to start budging for him? I don't know. But yeah, I agree, Ball. It has been a very slow week. It's been absolutely useless trading conditions recently. What do you think about NASDAQ? I am actually long NASDAQ. I don't know. I've probably been stopped out. No, not actually. Yeah, I did take a long position on the NASDAQ here on a 50% retracement. This was meant to be just a day trade, but it seems to have lasted a little bit longer. Yeah. See, I took it off this, the fib level here. So obviously we had the low, the high. So we came down by 50%. So I took the entry off here, just looking to see if we could continue this sort of uptrend. So we had the low, lower low, higher low, higher high, higher low. And then we started, you know, consolidating or not really doing anything in this area, but we also had the market gap here, and then we came down 50%. So I decided to take the trade and see if we could continue running higher. But yeah, so far it's not looking great. So I wouldn't be entering this market, you know, now, or in hindsight, I wouldn't have taken it. But, you know, bad trades happen. Day trade turned to investment. Yeah, I might just keep moving the stop down. The market can only go so low. Wait, ball out, did you just buy it, or have you had it for a while? Because if you just bought it, I don't think we can be friends anymore, because I don't think you used my code, so I don't get kickback. I'm starting to believe you need a humiliation ritual to sell your soul to become a profitable trader. I'll be honest, actually, you're kind of right. I mean, going through that unprofitable stage of just losing money is kind of the humiliation ritual. There is nothing more humiliating than, you know, spending hours trying to learn something and still losing money and seeing no improvement. And also, you know, if you've made the mistake of telling people about it, that's even worse. So, yeah, I wouldn't say that's actually far off. NASDAQ on 1 minute business. Yep. You know what? We might get a reversal here. We'll see. What was I on? 4 hours. Yeah, so I've lost interest in the NASDAQ trade. I'll just let it run. Dollar CAD's also not doing too well. So I took this trade yesterday, and I took it pretty much right before we had news. I can't remember what news it was. Something happened yesterday. I should have that in my head, but I don't. Anyway, it came down. What is that, like half a pip? 1 pip, a couple of pips to stop loss, and then it managed to reverse and actually came to profit temporarily, and now it's back in drawdown. So dollar CAD's been fun, but again, it's more of just a little bit of a gamble, really, just to see if we can get a larger pullback. I think this market's due a pullback, and again, it's a rough, I think, type of trade because I just don't have anything else. It's low risk, so it's fine. Still in my Swiss yen shorts as well, so these ones are fine. Looking to scale in if we can start breaking past the previous high. What else do we have? Dollar Swiss. I would also like to get short on dollar Swiss. I think this will be a great trade. Again, looking for this fib level to get hit. So we come in, fib, and then continue lower. That would be beautiful. Yes, code elite for a discount on the Edge Finder. I'll be honest, it does help me out. It also helps you out, and it helps everyone out. It's like a win-win-win situation. Yeah, pull out. It's all good. Don't worry. We can still be friends. As long as you let me ride in your helicopter when I come to America. You guys are funny. Okay, what are we doing? Let's see. I want to see what these guys are. Okay, so I'm on until 5:15. Fine. So this, wow, they're really long on silver actually. So that's, I think they're even more long than they were yesterday. I know we looked yesterday. They definitely weren't this heavy in long positions. So definitely not looking for a break and retest here because there's just too many retails long. I mean, 0.67 short. I don't think I've ever seen, or at least in recent history, seen one this stretched. So to be honest, I would love to see a lower price in silver. Get these guys liquidated, get them out to the markets, and then we can start taking the money. The S&P, they're heavily short on the S&P and the NASDAQ. So again, that's quite healthy for our long positions. So nice contrarian signal for us. But yeah, I think if we can see silver go lower, it'll be a great opportunity to buy. Thoughts on oil? I don't have thoughts at the minute, ball out. They only come to me about twice a day. And yeah, I've used all my thoughts for today. Reached a limit. No, but seriously, I don't really have anything on oil. To me, it's a little bit too mixed. I don't really have any data. The Edge Finder doesn't have anything for us either. So as far as I'm concerned, oil is pretty much a no-go zone, unless the only way I would take oil, I think, is if we could come up into this level. Then I would take maybe a short position just on technicals and following the momentum. But yeah, generally, I've got no fundamental bias here. Ball out. Yeah, we've got a similar idea on silver, it seems. I wonder what creates that pathological need to prove everyone wrong around him. Who are you talking about? Can you explain why AUD has been so strong? Yeah, China had an increase in GDP. It's also discussions about China's stimulus. I think iron ore's doing okay as well. Let me just check. I think iron ore's picked up in value as well. Oops, spelled it wrong. Wait, why can I not find it? Iron ore. Am I being stupid? I can't seem to find what I want. Oh, here. Yeah, that's not that useful. Either way, iron ore is picked up a little bit. So the overall view on the Australian dollars, it's not as negative as it was. We've also got to look at central bank policy. the RBA is one of the most hawkish, in fact, it is the most hawkish central bank right now. Let me actually just check something. I can't put it on screen, unfortunately, but I'm just going to look at the central bank probabilities that are coming up. So we've got the Fed that's expected to hold, but we are expecting the Fed to cut later this year. We've had the ECB that's just cut and expected to cut again. Bank of England is also expected to cut. Bank of Canada is cutting. Bank of Japan is holding. The RBA is expected to cut but then hold. So yeah, it's at the moment the most hawkish central bank. So that's providing a lot of support. Bull, I do agree, actually. I know we discussed the Aussie US dollar not too long ago, but yeah, I'm in alignment now. I think we could get a really nice long position. I'll look to enter on the next pullback. Actually, I think we could probably catch something quite nice. I don't know about Igor, to be honest. I was reading the messages he's putting. It actually seemed quite positive from what I saw. He said, you know, he likes Nick, he likes the show. It's just his view on the Edge Finder. But that's all I've ever seen. I've never really seen anything else. So maybe I missed out on context. AUD USD will start momentum, I think, after the election is over. Yeah, I mean, starting momentum, I think it's had enough momentum both ways, to be honest with you. So as far as I'm concerned, again, as I was saying earlier, we'd look for this break and retest or a 50% pullback to then get long. But any opportunity, I will be buying the Aussie US dollar. USD CAD's not playing nice. It's not, Sean, is it? Oil is fundamentally bearish. I don't know. I've got no thesis on oil. I was mixed on oil for, I'd say, the past month and a half, 2 months. I had no real direction. So to be honest, I've kind of just thrown it to the side. I've put very little to no research into oil recently. So I can't really give you anything. It's not on the Edge Finder either. So yeah, just no idea. Pound dollar, I would expect pound dollar to be down off the back of lower CPI on the pound and the RBA being hawkish. Here. Yeah, there we go. It's down. Makes sense. Longs don't make sense to me at the moment. So to be honest, I think I would also here be waiting for a break of this support and then potentially looking for a short after that, maybe just back into the lows down here. The trend is up though, so it's a little bit difficult. So if you wanted to be a bit safer, you would wait for the cross on these moving averages, indicating a trend change, wait for the break, the retest, and then the continuation to the downside. That would be the real approach I would take. $100 lot position, Aussie dollar. Yeah, I can't wait. Royal Trades, hello, good to see you. Zaza, I can check New Zealand CAD if you give me a bit more detail. Swing short from where to where? What's your stop loss? I'll have a look then. Max, hello, good to see you. Thoughts on EU and GU? I'd like to buy both of them. I'm just waiting for a pullback to the downside. They're both a bit too extended in my view. Let me get rid of that. Where is it? Here. Yeah, pound dollar's too extended. I would like to buy it. If we can see a pullback. Same thing with euro dollar. If we can see a move to the downside, I'll look to buy as well. But right now, there's nothing for me to do. So usually when COT data shows 52-week highs or lows position, it marks a high and low on price. Theoretically, yeah, that would make sense. I'm not too sure, to be honest. I've never put that much weight on COT data. I use it as a nice indicator, but it's not a religious tool or anything for me. Excited for 4-day weekend. I am actually, I'm going away this weekend. I've got to do some best man jobs. My, the people's what do you call it where you get married? Is it like a reception or something? I think that went bankrupt after they booked it. So I've got to go and see them. We've got to sort the stag do out and do all the fun stuff. Oh, okay. So what did you want me to look at? I forgot what the ticker was. Oh, New Zealand CAD. Okay. New Zealand CAD. Entry price. Let's see. So you're looking to short. Entry price is there. Stop is here. Was that my fault? You gave me, yeah, the stop and the entry are the same. Okay, here's your stop. Let's see. Okay, so you're looking for this, I think. Let me just make sure that's right. Okay, so you're looking for this. Let me just think what's going on. Oil is strengthening, so that's a negative for the Canadian dollar. I also wouldn't say that I'm necessarily that bearish on the Canadian dollar right now. As for New Zealand, yeah, it doesn't really give me much hope. Yeah, I'll be totally honest with you. I just don't really see a short on New Zealand CAD right now. Even technically, I think the only thing on a technical basis I see is this double top potential here, but that's about it. When you moving? Yeah, I'm moving in the end of July, so I've got to. That's why I didn't move, is because I've got to do all this wedding stuff. So the wedding is, I think it's the 24th of July. So I'll be leaving straight after the wedding. But I was talking to my accountant whether it was worth moving, then having to pay for flights for the stag do and back, and then for the wedding and back. I was like, it's probably not, because obviously from Asia to Europe, it's not cheap really. So the money I would save on taxes by moving sooner, it's pretty irrelevant. So I'd rather save myself the hassle and just move later. We will be in range for a long time in EUR yen based on macro. Why? Oh yeah, it is range bound, isn't it? Let's see. Oops. No, there's too many fibs. Yeah, I suppose so. The euro's definitely holding its ground. The yen's also doing well on the back of safe haven demand. So yeah, actually, I do kind of agree. I think the euro yen likely won't do too much until we're in a bit more of a clear period. To be honest, actually, I wouldn't mind just range trading. It's just selling resistance and just following the range. But yeah, I don't think we're going to get much of a trend here just yet. Strongest and weakest currencies on Edgefinder. I don't think the Edgefinder has a currency reading. Do you mean on COT or do you mean actual currency strength? I'll leave the COT on here for a second. Risk on currency might break today. Opium rejects New Zealand Swiss and Australian dollar Swiss on the last resistance before big push. Maybe, Max. I think the markets are a little bit of a sleeper mode right now, to be honest with you. It's a case of really, as far as I'm concerned anyway, it's a case of waiting for this 90-day period to be up and then we'll have some clarity. But it's just too uncertain for me to go into a bit, especially like a swing position, because they can be completely thrown off very quickly at the minute. How's the quoting soft drinks and coffee going? I'm not sure what you mean. Euro New Zealand, also no real opinion, to be honest, on that one. Look at what chart? Let's have a look at Euro New Zealand. Interestingly, Euro's losing strength. Is that across the board? Yeah, Euro's down, really, isn't it? Okay. To be honest, I think I would view this more as a buying opportunity. And that would be just following the trend, following the Euro strength. Let's see what we've got. I suppose we've broken the trend here. Well, that's not super important. Yeah, I would look for a reversal, actually. I think this trend is very clean. So we can see this market start to slow down and possibly pull back in support levels. It might be a good opportunity to get long. But I don't have much of a fundamental view at the moment on Euro New Zealand. So take that with a pinch of salt, do your own research, as always. Quitting soft drinks and coffee. And don't think I ever said I was quitting soft drinks and coffee. I love my caffeine, I love the nicotine, and I love compound interest. It's basically what I live off. And carbs. It's like my vice. Diabetes is going to catch me one day, but that's okay. Hopefully by the time I'm that age, we'll have some sort of anti-diabetes pill. That would be good. And if not, then I'll get my billions of trading dollars to fund it. Oh, you meant the strongest and weak? Oh, okay. I see what you mean. Maybe I was being pedantic there. Sorry. Here you go. It's been a bit dense. Oh, New Zealand CAD's here. When did this update? Hold on, let me just make sure, because I think that's changed since I looked at it about 10 minutes ago. So New Zealand CAD, where's Australian dollar? Okay, so that's dropped down to 8. Interesting. So New Zealand CAD's now 9. That changes things. Aussie CAD's 9. Bitcoin's 9. Nasdaq's 8. UK 100. Let's have a look at New Zealand CAD then, because I didn't really have much for it, but if the Edge Finder is saying it, then maybe there is something there. Oh, wait, that's why. It's because someone said they were going to short. Well, whoever that was, I can't remember off the top of my head. I apologize, because I might be looking to do the opposite. Moving average across here, which I quite like. It's a nice little trend change confluence here. Yeah, so I think what I'm going to do is look for a pullback off this previous high and look to go long at, what's a nice round number here? Yeah, maybe there. Excuse me. Yeah, I think this might be the play I'm going to make. Look for a pullback into resistance, pull back down into support, then continue higher. So we'll see about that one. But I think that could be quite nice if we can get a new trend start to build here. Yeah, Lee, I know. I'm half joking. It's fine. I don't think I'm going to get diabetes. I actually don't live that unhealthy. I know I make jokes and things, but I think the problem is that I'm sat down for so long. So piling on a few of the pounds, but it's all right. I'm moving to Bali soon, so I can be one of those influencers that come with me to the gym and let's eat some raw fruits and veg together. And I'll sell you a fitness plan for $10. And then I can go on TikTok shop and start selling stuff on there as well. That seems to be the new trend. Although actually TikTok Shop makes a large amount of money if you can manage to crack the code on there. So New Zealand CAD's getting added to the watch list. There we go. What else do we have? Aussie CAD. I don't want to buy Aussie CAD. I'd rather go into Australian dollar, US dollar, to be honest. Let's have a look at Bitcoin as well. I don't trade Bitcoin, but I like to sometimes just take a check in and see what it's doing. Normally on the... Oh, it's interesting. I know we looked at it yesterday, and we will look. Well, I pointed out this weekly fib. Maybe that's actually got some stuff. I'll start again. Maybe that's got some substance. We'll see. I don't think I'd want to buy just yet. I think I'd want to see the daily change bullish again. Yeah. Maybe next week Bitcoin might be quite a nice long position, actually. We'll see. I don't really know anything about Bitcoin in terms of like the drivers and things, but if the technicals are there and the edge finder's there, it might be worth a go. Yeah, that's pretty much it in terms of what's changed, though. Would you be able to explain about how the edge finder top setups work? Of course. So it's essentially a what do you call it? It's like a matrix, I guess you could say. Please don't send me an email. So what it does is it takes in data points. So it would say here, you can say retail is long or retail short. What's the, which way do they lie? I don't know exactly the formula behind all the calculations, obviously, but for simplicity, let's say, okay, retail is mainly short. So that's a +1 for the bullish side. So that would give us a retail sentiment here, +1. So that gives us one check in this score of 9. Seasonality is negative, so that'll be a negative score there. So it weighs up all of the factors. So you've got sentiment, you've got seasonality, you've got economic data points, or what do you call it? Economic indicators is the word I'm looking for. And it will say, okay, well, this is better than that, or it's neutral, it's bullish, it's bearish, or it's +1, -1, 0, and it will give you a final score. And then that final score then translates into a bullish, bearish reading, and it makes it all very nice and simple. But yeah, like Lee said, actually, I'm sure there's a video. If you want more detail, I'm sure you could probably contact the Edge Finder guys. What else is there? There isn't anything else, I don't think, that I'm really interested in looking at. Gold has dropped down to a 5. Maybe my Edge Finder was really outdated before, because I swear it was really different. I really thought gold was much higher on the list. Maybe I didn't refresh it enough. Anyway, it is what it is. Yeah, UK 100 does look nice. Really nice rejection here off the 50 EMA on the monthly time frame as well. 200 moving average on the weekly. I think I might go in for a FTSE long, to be honest with you. Might just go in for a really aggressive trade. I said yesterday I was going to take the trade on London today, which I didn't do. But to be honest, I might just do this and take a really aggressive entry. So I'd be looking for this gap here to get filled. Yeah, I like it. We'll see. I'll just wait for this H4 candle to close, because if it closes inside this range, probably not going to be that interested. But if we can close outside this range, or we can break above, that would be a nice little, what do you call it? A nice confluence, I guess is the word there, to continue higher. How do you activate multiple charts in TradingView? You click on this. I don't have the super premium one, but you click on what you want, then go to upgrade. Actually, TradingView's got a huge discount on at the minute. But yeah, you go up here and click. I think with the free one, you can have 2 charts, But then I've got the one with 4 charts because I don't really need any more than that. So there you go. Yeah, I think FTSE is probably the best one right now. Let's see, we've been stopped at how are these trades doing. Oh, wait, hold on. I need to put this back. Like this. There we go. Yeah, it looks like USD CAD's stopped me out, which is unfortunate. I'll add it back to the watch list. Swiss yen's coming back down, which is nice. Nasdaq's not really doing anything. Fun stuff. Floper says no. What do you mean no? Yeah, no problem at all. I've got about 10 minutes left. So if there is any questions, let me know. Does my girlfriend trade? Yeah, she does trade. She'll trade my money for materialistic goods in shops. Where did you read the list of hawkish, dovish central banks? A private source. We put that in the Discord. So if you would like access to all that type of data, you can get free access to the Discord. She trades commodities. I'd say she more trades stocks. Like New Zealand yen, Aussie yen. Yeah, the problem is the Australian dollar's definitely holding its ground. It's also, like I said earlier, it's a hawkish central bank, the RBA. We've also got the Bank of Japan that's not necessarily hawkish, but they are on a path to normalization, but they're holding at the moment. So it doesn't really give me much hope for this market. So we've got the yen that's doing very well. We've got the Australian dollar that's also doing very well. So shorting the Australian dollar, I just don't think is a wise idea right now. Lee, you've got the same thing. It's a difficult life. But actually, I've been here for almost an hour. You had your chance to come and talk to me, and you didn't. Down to my last $100. Should I still trade with my own money and try to get money to buy a prop firm challenge, or should I use my last $100 to buy a prop firm challenge straight away? Neither. Go to Udemy, spend that $100 learning something that will make you money. Trading isn't going to be the fix. If you got $100, just stop trading. And I'm not saying this to upset you or to be the evil guy, but it's just not going to do anything for you. Because even if you let's say you have $100 and save up an extra $200 to get a prop challenge, you're statistically going to lose that challenge. And again, that's not me saying that. That is quite literally the stats. So why not use that money to learn a skill like freelance design? Just do something that is going to make you money. And then when you've got capital, then come back to trading. And this is one of the big problems, I think, in the trading space is people come into trading think it's the way out. It's the way out of being poor, or it's the way to becoming a multimillionaire. And it's not. Trading is for wealthy people to maintain their wealth and slowly grow wealth. It's not for people to come in and suddenly flip their accounts and make millions of dollars. I wish it was, but it's not. Working off the gig he's had since November. Okay. It's interesting. The Edge Finder is saying the risk is actually on. We've got a score of 3 on risk, but monthly is off. Okay. Yeah, Alan, I saw that. I clicked on Nick's stream as that was coming out. I saw it was 25 and I was like, oh my God, closed the stream and I went to check my calendar. I was like, oh, okay. That was big. I was like, oh dear, that's a problem. I don't know about that. If you can compound a 10K account, you can compound 1K account or 500. Betterment, no, you can't. Well, okay, I'll tell you what. Let's just do something a little bit different for a couple of minutes here. Let's go to compound interest calculator. Right, and I'm not doing this to be a horrible person. I just want trading to be realistic. Let's say you average 2% a month, because that's very achievable, but it's also, good. Let's say you do this for 10 years. You've got $100 and you never deposit again once. 10 years of work, you'll have $848. Let's say if you $50 a month deposit, 19,000 for 10 years of work. You could have just got a job. I know that 19,000 sounds like a lot of money, but for 10 years of work, 9 years of work, it's not. So yes, maybe start compounding if you want to do it for the next 9 years, depositing consistently, making 2% every month. But again, I would just, I would really honestly say that putting that money into education and learning a skill that can bring in 19,000 and more a year is much better than trying to trade it. Bullanets, sorry if I mispronounced your name. Yep. And I was that guy once. I had a very, very small account, and it's just, it leads to problems, because even if you have a great month, let's say you've got $100, let's say you flip 50%, you make 50%, great, you've got $150. What are you going to do with that? That's not going to do anything for you. But what it has done is it's now set a false expectation in your mind that you're going to keep trying to do, and you're going to keep trying to chase the dragon like drug addicts do, and you're just going to lose. That went a little bit off topic, but I was just trying to prove the point, or at least explain my point. Here we go. Bashi's joined the chat. It took him, should we say 7 minutes, maybe a little bit, give or take, to bring up violence. Okay. Yeah, I really like the FTSE. I think this will be, if I don't take it today, it'll probably be one for Monday. I don't really like to place new trades on Friday. Dollar CAD is already gone, so I'm going to ignore that one. New Zealand CAD, again, I think this is going to be a great one. Silver will be a really nice idea if we can see it come lower. I mean, like 99% of retail is currently long on silver, according to the Edge Finder. So yeah, definitely don't want to be buying silver right now. I think if we can come down lower, that would be a great opportunity to buy. And to be honest with you, I think in silver, in terms of targets, I'd actually be really happy to hold to 35. Maybe even 40, but that would depend. If you're consistently profitable, it means you can make money off the market. If you're profitable with $500, you're profitable with 10K. If you're unprofitable with 10K, you're unprofitable. Absolutely, but I'm not talking about profitability. I'm talking about realistic returns. I would say capital absolutely is an issue. I agree with the statement. You can make money on $1,000. You can make it on $100. That's fine, but it's just, what's the point? Again, you could work for 9 years making 2% a month, and you can have 20K, give or take. Again, you could work a pretty mediocre job and get, in fact, minimum wage maybe, and get 20K. So I would, again, if it was me, get some sort of income, cash flow, build your money up, then go to trading, rather than trying to use trading as the escape, because it's just not going to happen. Unless you are a total prodigy. Anyway, I do apologize. It's been a bit of a negative way to end the stream, or in my segment of the stream anyway. Hi, James, if you were to start out with low capital, will you adopt your trading to suit profit? No. I don't like prop firms. I don't agree with the business model. I don't like the way a lot of them operate. So no, I would quite happily just trade my own money. This guy's such a drag. Put on Pulver. Sammy, Pulver will be on in a couple of minutes. Feel free to just mute the stream until then if you don't like me. That's cool. Betterment, again, I do agree it's a skill, but what's the point in having the skill if you've got no money to trade? I see what you're saying. I'm not disagreeing with your point. I'm just also adding on to your point with my own point. But yeah, anyway, like I said, it's been a bit of a sour way to end my segment, so I do apologize. But that's just my view. You know, that's what I'm here for, is to give my input and my thoughts on things. Anyway, so yeah, there's not much going on. So I think I'm probably just going to call it a week today. Call it early. I think, yeah, New Zealand CAD, silver, and gold are probably my top picks for now. Probably not trade for the rest of the week. I mean, it's only tomorrow. I mean, today for me, trading's already done. I don't really trade in the afternoon. I'm in the UK, so it's 3:15 now in the afternoon. So I've got no interest in placing new trades. So I'll basically just be taking tomorrow off. Lee, I appreciate it, and Bashi. No, I know, I get it. I'm not saying that no one likes me or anything. I'm just saying that, you know, it wasn't the most upbeat, cheerful way to end the stream, which is fine. No, Betterman, it's all good. You don't need to apologize. I wasn't taking it as an argument or an insult or anything. It's just, you know, it's one of those things, isn't it? It's like, I don't think I could go and trade a $100 account. And that's not because I can't trade. It's because I think I'd get too impatient. I think I'd get very, very bored making, $2 off a 2% trade, and I would end up over risking. And that's just because, you know, it's just the way I am. I don't want to work for $2, but it varies person to person and the value of money for each people. So there are other things there. Anyway, guys, my time is almost up. I've got about a minute left, and then Chris Pulver will be coming to take over the show. So when I leave, don't leave. Chris is a great trader. You're in good hands with him. The argument could be make that if you have low capital, then leverage prop firms. Yes, I suppose you could, but the other part of that, the sort of defining thing was $100. I don't know any prop firm that's doing it $100. I suppose you can get, I think FTMO do a 10K account for like $80, I think. So that is an option. But then the other problem arises. You've got, I think it's a 4% chance of getting funded, and then it's an even less chance of actually getting a payout. Are you going to put the last of your money on the line because you think you're a complete exception? I'm not saying you're not. I'm just saying, do you really believe in yourself that much? If so, cool, do it. But just know that, again, if it's the last of your money, the stats are really, really against you. You would actually have more, you have more of a chance going to a casino, putting all your money on red, because at least then it's essentially 50-50 or like 49%. You got like 10x probability of making some money at the casino than doing that. Would you close trades with holiday coming up? No, probably not. I don't really trade around holidays and things. If there's a holiday, it generally just means less liquidity, less volatility in the markets. It doesn't necessarily, in fact, we're very unlikely to get spikes from holidays unless there is, you know, some catastrophe, because there's just nothing going on. Everyone's off. Lee, yeah, I don't think all props are bad. I mean, like I said, FTMO is one that I would trust, and I would use FTMO, but for the rest of them, I just don't know, really. I've heard some pretty bad stories. The easiest way to know this is to learn the candlesticks. To buy and sell it doesn't mean it's not possible. Candlesticks. Risky. I'm not 100% sure what you're trying to say there, my friend. Markets, yeah, actually Friday. Let me just double check. I think they are closed tomorrow. I don't know, Forex Factory open. Either way. No, again, guys, I'm not going to give any recommendations on prop firms. I've got no relationship with them. I've got no interest in them. I think, again, if you're going to choose one, just make sure it's backed up by something. So, for example, there's ones that are backed by brokers or something else. That's a good sign, but it doesn't mean that much because their rules can still be predatory. Yeah, Alan, that makes sense. Okay. Might be time to look to go short on euro pound into around the 0.85 area. So again, might be looking for that one later today. So I'll be taking FTSE long if we can break above this range or break and hold above the range. Gold is actually pulling back, which is nice. So if we can get gold to come back into the 0.5 to 618 level, I'll be taking a long off there. Yeah, that's it. Same thing with euro dollar. Actually, if we can get a 50% pullback on there or 618 pullback, I'll be looking to take a long position. Sammy, I think I'd like to have a 6-figure personal account over a prop firm. Or actually anything really. I would 10 times out of 10 take a personal account over anything else. Do I put content on Instagram? On the Elite Traders Instagram, yeah. So I make reels every day. So like the gold thing I talked about, I made a reel out of that and things. So yeah, we post on social media quite often, but I don't post on any personal accounts though. David, I miss you too, my friend. It feels like we've not spoken in a while. My Instagram handle is elitetraders.io. In fact, it's here. That's the Instagram. Yeah, I totally agree. Seems like you're dropping wisdom in the chat today. Okay, guys, Chris is here to take over the show. So I'll see you all later. I appreciate you being here. You've been lovely to talk to as always. If I don't see you tomorrow, enjoy your weekends. Trade safe, don't get margin called, and have a good one.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Thursday. Just scoping out the markets. Yesterday was a pretty interesting day. Pretty calm until Powell started talking. And shout out to Alan Perez. I didn't realize I just got off the phone with an Alex, and I was calling him Alex through the stream yesterday. So my apologies to Alan. That won't happen again. But it was fun to tag team a little press conference with him, or just the Q&A at the Economic Summit, where Powell didn't really say things the market wanted to hear. So we dropped in the afternoon. I think at one point the S&P was down over 3% and the NASDAQ was down over 4%. It did come back a little bit late in the day. But pretty nasty move. Now, from a technical standpoint, I did talk about this. I posted this on YouTube. I sent out some trading view videos yesterday. I'm looking at this as a potential swing where this was a low from Monday the 7th. Okay, Monday the 7th, Tuesday the 8th, or sorry, Monday the 7th, Tuesday the 8th, which also sold all the way off. And then Wednesday the 9th was that big rip, pulled back the next day. I mean, just a lot of volatility, a lot of intraday swings. If there's any structure here to work with, this low to this high, producing a move like this, a low to high swing. Okay. And then if we have this as a pullback, a lot of times what I'll see with some type of wave structure is the market has a retest of the high, a retest of the wave structure low, and then a retest of the high again. Now, I'm wondering if the retest of this high is able to send this higher, right? If we actually see this bottoming formation, is it able to get back into this gap here? That makes sense? So when yesterday started to slide and sell off, this is the first thing I looked at thinking, okay, well, perhaps this market's going to come down into this area, okay, before we start to get some legs to the upside. So maybe we get through this monthly cycle, which today's an expiration. It's the monthly expiration for today with Good Friday. Tomorrow, markets are closed. If we sell off a little bit and then we rally from there, maybe early next week is looking a little bit more optimistic. Okay. So that's where we're at. We'll see what today gives us. Overall, markets are clinging to some green. So SPX is positive, SPY positive, Qs slightly, actually totally flat. NDX is 0, Qs are 0. Dow negative 1.47. Wow, that's way down for Dow today. This is on United Health Group. I think UNH took a huge dump today. UNH, baby, that is way down. Yikes. See what they have here. Dropped 20% after Q1 earnings, missed expectations. Wow, that's bad. Down over 19%, largest decrease in September. That has to be just a monster outlier. I can crunch the numbers and exactly how bad that was. Let's find out. Fudge, man, that would have been a great one to trade. And that's kind of the wild and crazy game of trading earnings is, there was nothing that I thought on UNH that would have been attractive enough to trade, but I will crunch some numbers really quickly. Look, this is what's going to happen too. If we see companies that are missing earnings per shares and revenues, I think the stock market is going to absolutely obliterate them right now. I think everything is super, super sensitive to any misses. Any bad news is going to be accelerated or exaggerated. Any good news might be okay because it's like, well, we need everything to be good because earnings are still very high with these current valuations. Okay. All right. So let's go UNH and let's talk through the numbers here. So the earnings expectation is around 7%. And I'm looking at a lot here in the single digits. So like 4%, 4%, 4%, 4.5, 4.5, 5, 6, 5.72, 7.39. I'm going to say even 7% would have been what I calculated. So 0.07 when the stock was trading up here at 585, 0.07 at 585. That was 585, 585.47. So I would have expected, within reason of what earnings have typically done, about a $41 move. Okay, so 40.98, that's a $41 move is what I would have expected to see this do. Okay, so a $41 move that turns into a $123 move. So monster payout potential by and this is what I typically do with earnings trades is I go both directions. Now, the one thing you never know is how do you know when a company is going to miss earnings or how do you know when a company is going to beat earnings? You don't. You really don't. So all I can do is go based on the last 10, 15 earnings reports. How frequently does it, hit expectations? How often does it get to the expected move? How often does it exceed the expected move? And what I try to trade is a strategy that if I get the expected move, I make money. And as long as I see that the expected move is hit probably 6 out of 10 times, 7 out of 10 times, I'll take the trade. And this one was it blew through it. So anyway, let me see, like, would I have taken this trade? I took a winner this morning on DHI. That was a good one for an earnings play. I took a winner there. But if I go to a 7% move, let me see post earnings. How often within 8 days does it hit it? So I'm just checking out some data right now. All right. So how many times does it hit 7%? Let me tally this up. So it hits there, doesn't, does, finally does on day 8, which is my least favorite. Does not. It mostly doesn't get to 7%. Wow, that's a major move then. That one did day 8. I hate that, but it still got there. Does not. Crazy. Okay. So in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 earnings. So out of 16 earnings reports, I have 1, 2, 3, 4, 5, 6 times. I have 6 times that it gets to the expected move, which is 7%. And I have 10 times that it does not. Okay. So this strategy, like this would not have been a trade I would have taken, because if it doesn't hit the expected move of at least 7%, I'm not going to take a directional trade here, because even if it went up or down, that's a directional trade. And most of the time it doesn't hit the expected move. So this would not have been on my radar to qualify as a trade of one of my, kind of core earning strategies. But again, everyone looks at this and they're like, oh, exciting earnings. Look at this crazy move. Right. But what I think of is this move dropped 123 points. And the reality is you can see how sensitive the markets are to bad news, right? This stock got smoked on what should be an average move of about 7%. It's down 20%. That's why the Dow is down. Okay, now look at this from the weekly time frame. I mean, I don't know if this, is this stock going to bounce back from this, or is this going to be a floor that is broken? You would think that United Health Group is going to be fundamentally healthy. I know they had some drama last year when their CEO was murdered. That was some shocking news. Let's go to UNH. So trading well below estimated value. Earnings are forecast to grow. Level of debt, yes. This is like the big air pocket that everyone's worried about this year between like July to December. Let's take a look at the fundamentals. Price to sales, price to earnings 37.1. I mean, longer term, it's like, yeah, there's some good upside to good old United Health Group, but not right now. So, is it an immediate earnings compression and we come down to like a 30 multiple or less? Compare this to its peers, 37.1 times earnings versus 28.6 versus 16.5 versus, it's compared to its peers, it's almost double. It actually is double. So, I don't know, interesting. But the move itself was an outlier move. It's an outlier move, right? So anyway, crazy stuff. I do wonder if it bounces back. I wouldn't mind, taking a stab at it. But obviously, if I did something like, hey, I'm going to do a bull call spread. Well, that's if price stabilizes and heads back up. And maybe it does. Like if this responds, like we saw the reflexivity of, progressive, like when PGR, let's go to the daily time frame here. Okay, when PGR snapped down to the 200 moving average, that was a really good opportunity to buy, right? Went up to all-time highs again, came down to the moving average, snapped back up again. So I'm wondering on UNH now that it's, kind of hated. This could be one of those rules. It's like, don't guess, but if I get some asymmetry, let me see. I don't know. I'll price it in. So we just had earnings. If I go out to, let's say, the May expiration here. So I don't love the strikes because they're 10 wide, but if I did like a 460 by 470, so this isn't a terrible trade. If I went for a gap fill, this actually works out pretty nicely. If I did a 470 by 480, I don't love this trade because I'm basically giving the market a $12 advantage over my trade. If I do a 470 by 480, I'm only risking $400 to make almost $600, but I need price to go $12 up. And the reality is, I think price can fall into this like 440 handle. So what I think I'm going to do here is let me see if I can do a 440 by 450 and take this trade for, let's say, even $5. And I'm going to go, I don't know if I can get this fill or not, but I'm going to go $5. So if it comes down to 440, I'm gonna see if I can take this trade for 450. So I'll post this trade. This is going to be a pending order. It's going to be good for the next 29 days. Here's what happens. If price goes down a little bit further on continuation with the earnings play, if it responds at all, if I can get this trade filled for less than $5, okay, if I get it filled for less than $5, I'm going to take the trade, because what I'm looking for is I want my reward to be greater than my risk. And if 440 is a nice support zone, if we came all the way down to 440, that would put this in the money a little bit. That should decrease the size of my debit. So I'm going to try to get filled in this for 450, similar to if I took the trade. This one's asking for right here. So that trade's only asking for about a 455 debit. So I'm going to do the same thing down here. I'm going to go 4.60. And that way I'm risking 460 to make 540. I'm going to place this trade. Okay, I'm going to place this trade. So this is good till canceled, and it's pending. So let me throw this in. We'll see if it works. So pending order. All right, let me post this in my pulver alerts. This will be for stocks options. And new trade, UNH 5/16 expiration. Buy the 440 call, sell the 450 call. 4.65 debit. No, 4.60 debit. 4.60 debit. Pending. UNH dropped big on poor earnings. But fundamentally remains strong with 440 price level offering strong support. Price will need to drop towards that support zone and see if I can be filled at $5 debit or less to offer a 1-to-1 reward to risk. The 460 debit offers up a slight, that'd be a slight surplus if I had 540 divided by 460, I'm offering up about a 117% return. Return on risk. All right, so trade is posted, and then let me do a screenshot here and see if this will hold. So I'm looking at getting filled there. Anything above here works, and it's defined risk for just a couple of bucks. And we'll see if it comes down to find that low at 440. So let's go horizontal ray, 440. There. Okay, trade is in. So it's pending. It has to, price has to fall a little bit with some of this continuation. I wouldn't be surprised. We can have this conversation in 30 days. I wouldn't be surprised if prices somehow come back to fill the gap. So I think it was a bit of an overreaction. It's defined risk. So even if this thing were to fall to 0, it's like, well, okay, so I lost, if I get filled on the trade, I lost $460. But let's see if it gets filled first. Okay. Set a chart alarm around the 445 handle and keep an eye on the debits. Look for UNH debits. Because if it's under $5, I'm willing to take the trade. Doesn't have to be perfect, but over a 25 to 30-day window, if this reverts back in any way, shape, or form on basically a 3 times earnings move. Like I calculated about a $40 move, right? And it went $120. That's a 3 times earning move. Like that's a big overreaction. And typically prices, don't do that. Yeah, you'll see it move and then you see like a quick reaction. Okay. But markets are sliding a little bit lower today. I think we're back in red now. So SPX down a little bit. NASDAQ is down 0.5%. Dow's way down because of UNH. Russell is down. It's flat at 0.10. VIX on the day. If we go from 60 to 28 and then we're back up into like the 30s or 40s or even 30s, 40s, 50s, just more wild volatility. But again, it's what we're trading. It's our current environment. So to sit here and be like, oh, I can't believe this. It's like, well, it's happening. So let's figure out how to not do anything stupid and take advantage of it. When volatility is high, I do like to sell premium. I've got hedges in if we're going to go back and retest lows. So I'll just keep an eye on everything. All right, watching that for the day. All right, good on that. That was UNH. Big reaction though, yeah, for sure. Okay, let's go to the move index. This is bond volatility, so we should be seeing some TLT going higher. Nope, it's actually flat on the day. That means that the 10-year is probably sticky. 4.29. We're still above the Liberation Day breakout. I mean, I'd like to see this come back down towards those Liberation Day lows, or at least the starting point, but just a big ugly shakeout with the bond market. If the market slides a little bit lower, this is probably a good thing for bonds. If this does act as a safe haven, I'd like to see TLT again from a high to low, a high, a low. If markets can come back and find some equilibrium, maybe this puts in a decent level of support. But that's the shaky ground right now with the markets is like, bonds are in a 4-year bear market. They're in a 4-year drawdown. Bonds are offering very little safe haven to cushion accounts. The 60-40 is the most basic, portfolio mix. And, it's done because most people forget about it when the market goes up every couple of years, and any bad downturn is like, yeah, it's over in a couple of years. No big deal. But 60-40 is a lazy approach to trading. I would look, if I talked about this before. So what I mean is, if you did the 60-40, that would be this, right? 60-40 is, this is your pie chart. Okay. And you do 60% equities, 40% bonds. I think that's a horrible portfolio. I would rather go, even 50% stocks and 25% gold or 20% gold, silver. I can make this really simple. If you like Bitcoin, 50% stocks and ETFs and indexes, 25% gold, silver, and 25% Bitcoin. If you think that's way too much risk for Bitcoin, then sliver that down and maybe go 10% Bitcoin. Make sense? So 50% equities, 30 to 40% mix between gold and silver, 10% Bitcoin. I would take that over putting bonds in my portfolio anytime. So, and this is exactly why I think that if you were to own, and this is a question, would you rather have a bond that is backed by the good faith and credit of Apple or Google or Microsoft or any company that's worth, hundreds of billions of dollars in cash, or the US government that does have, endless authority to print whatever they want, and it's kind of funny money? And it's like, if there's ever a credit event or a crisis event, this is what's in question. It's like, is the good faith in US credit still backed Does it mean anything? Do we just print more money and debase the currency? So yeah, I think that a 60-40 is garbage, and putting in a different mix. I like gold. I like Bitcoin. It depends on, I think, where your risk parameters are at. But U.S. equities. If the world's trading equities, you're still trading U.S. equities. There might be a rotation out of the U.S. this year, so it seems. But as you can tell, if the U.S. isn't doing well, nobody's doing well. So it is in the world's best interest to see that the U.S. markets still remain resilient. We still have the biggest, most powerful companies in the world. I wouldn't be surprised in the next 5 or 10 years, we're still talking about the same publicly traded companies, because as innovation and evolution happens, and companies start making more money and become more profitable, they're probably going to do that through automation. And I wouldn't be surprised if a lot of companies are sitting on like these small market caps of maybe hundreds of millions, maybe a couple of $1 billion, but they never go public. They don't have to raise cash. They don't need to raise capital. They don't go public, and they're sitting around anywhere between 100 million to a couple billion, and they never go public. And all of a sudden, the stock market is different. I listened to an interesting podcast yesterday, Thoughtful Money, if you want to check it out. Adam Taggart's the host. Jim Carson was on. It's pretty scary stuff, like talking about where yields are at, how they've been pretty spot on with some of the risk-off trading this year, and being risk managers as opposed to wealth managers. Everyone wealth managers does something simple like a 60-40. I think it's trash. So risk managers probably fare a lot better. I am a risk manager. So I think that's the most important thing, is if you can survive and not risk a ton and not do anything silly, there's lots and lots of good opportunity to make money in these markets. But it's when times get like this, where it's like there's all these uncertainties, it's very, very slippery. So anyway, all right, let's keep going. Dollar index with oversold conditions, as I've been saying this week, because I saw the oversold conditions with divergence lows. Be careful on selling this dollar index, right? I do think that if the dollar is going to form a low and retrace, I still think there's a chance to sell the dollar. But the reality is, I don't know how much lower this dollar goes. I really don't. I think this could be ugly, but because of this low that changed courses, this low is so fast, I wouldn't be terribly surprised if we put in some type of extreme like wedge formation, and then we squeeze back up to this area. And either this is a rejection point, or this actually closes above and puts in the bottom. I wouldn't be shocked to see the dollar do something like that. I wouldn't be. I don't know, but I don't have a good trade lineup on the anybody that's been short the dollar, benefiting from Aussie dollar longs, New Zealand dollar longs, dollar CAD short, euro dollar, pound dollar long. You should be moving stop losses and taking profits. Trail yourself out, let it run if it's going to run. But I think it's moved enough in a couple of weeks that taking profits would be a good setup. Yep. Alan, did you know that if you did a 60-40 with gold, it actually outperformed 60-40 with bonds for like 90 years? So if you replace a bond portfolio with gold, it's actually performed the exact same or better. So you're not really missing anything. And the last 3-4 years, look, the bond market's been on 40+% the last 4 years. Gold is this is a crazy stat. I don't know if anybody saw this. I think I posted this in my journal yesterday, the trading journal. Take a look at this. The last 20 years. So you go 20 years back on GLD versus SPY. GLD just crossed over. So now your top performing 2-decade run, gold has outperformed the S&P 500. That is ridiculous. I don't think anybody would have really guessed that, because there have been periods where gold has done absolutely nothing while the S&P just keeps ratcheting higher. Here's a 6% move. Here's a 10% move. Here's a 50% move. Anyway, thought that was really crazy to see that. Now, I also think that this is what we're dealing with. Gold overtakes tech as Wall Street's most crowded trade, right? So it's not going to surprise me when gold comes back 15, 20% and finds that 200 moving average that I've been talking about, all year. I'm just not calling the top, because I understand that we could have a wilder, crazy blow off type move that maybe stretches way further than people think. So gold is pausing right here with a little bit of a pullback. I'm curious what the price action looks like if we have a large red candle If we have a large red candle, that could be seen as a dark cloud, and perhaps that's a bit of a topping pattern on the daily time frame, and then maybe price comes back down a little bit. I'm still interested in buying dips on gold, but I keep telling you, I'm not interested in buying immediate dips. I want to buy this dip, not this dip. If this just goes sideways, sideways, and goes up again, goes up again, goes up again, all I'm going to do is take stop losses and start moving them, and then moving them, and then moving them, and then moving them. And I measured it, like we could have that big run like 2009 to 2011. Maybe this gets up to 3,800. Maybe this gets up to 4,000. And if it does, trail it on the way up, and eventually when it crashes, you'll be happy you took some profit. So anyway, keep an eye on it. All right. Silver, nice little comeback. That's good. Copper, I want to take a look at copper 4.62. This one expires for me in 7 days, which will be nice to sit on over the weekend with the markets closed, and I'll probably have most of the profit. I think I'm up most of the profit right now. Copper is, I think the most I can get out of this. I don't know if so the spread itself, I don't think I can close it where I want to close it. So what does this close me out at? So I'll take about $150 profit. Which is fine. If I close it out now, or I can just let it expire and let it settle. But I'm up 91% of my max profit. Probability of coming back to 4.2, 4.19, 4.18, pretty slim. This trading at like a 3 delta. So unless we have a crash next week, this should be fine. This is a Thursday expiration, I believe. And I also have a profit trap that's over, I think it's over $1,000. So if price were to drop coming into this Thursday expiration, I might turn what's $160 profit into maybe $1,600, almost like $1,100. Maybe. We'd have to have like a really nasty move, but we'll see. I'm just going to let it go. I think I'm good on the expiration there to let it go to full expiration. Okay, we did gold, we did silver. How about Bitcoin? Bitcoin, impressive resiliency. Still more time on the right-hand side of the trend line. 20% drop from now. Yeah, let's go back to gold. That would be coming back to the 200 moving average, right? Yeah, if we come back to the 200 moving average, it basically flattens out gold. That's why I'm saying I don't think it's going to happen without having some type of, look, I don't know, but it wouldn't surprise me if gold just keeps churning and churning and churning and gets so overstretched that it becomes more of a crash type trade. That, look, you go out for the end of the year. If you're not timing some gains on gold, you might be left like, holy crap, I didn't make any money, And I don't know what that catalyst is. I don't know if the dollar pivots hard and goes up, if all of a sudden gold starts to go the opposite way. Like maybe that's the big pivot, is the dollar looks like it's on the brink of collapsing, and all of a sudden the dollar pivots hard and goes up, and then gold drops. I have no idea. Right? That could be like milkshake theory all over again, and everyone thought it was over and done with because the dollar's so weak, and Trump and co want to de-dollarize, but de-dollarization is actually bullish for the dollar. Just because if it's going to dry up liquidity, typically the dollar is going to get the flows. But maybe not. Maybe this is the year it changes. I still think that this level gets hit by the end of the year. So I wouldn't be opposed to seeing gold like capitulate higher. And this is where everyone's like, don't short it. I'm not shorting gold. But if it runs and it looks like it's a broken chart, by the time this stretches up like another 10, 15, 20%, I've got to be looking to take some stop losses, because that's probably going to lead to what every chart leads into. Every chart that looks like this, bull market, nice and healthy, and then capitulation. Every chart that looks like this looks like that. Every chart. In the last couple of years, all the examples I've seen have been in futures. Cocoa did that. Coffee did that. Orange juice did that. Lumber did that during COVID. You can talk Palantir last year, Carvana. Like, you've seen all these stocks do that and just have these monster corrections. So if gold gets to that point, make sure you're trailing taking stop losses, or taking trailing stop losses. All right. As I said, Bitcoin is showing some good resiliency, not full on risk appetite. I still think this goes sideways. As long as we hold above about 74K, this looks pretty good. Now, a break above here has what looks to be good bullish confirmation to get back to retest highs, but don't be surprised if we spend time going sideways. right? More accumulation like we had pre-election, more accumulation where it's like, yep, this just rounds out a big low. Eventually, when it's time for some risk appetite, maybe this comes back into play. I would certainly cheer on, especially as a diversified trader this year. It's like I've got my hands in a little bit of everything. I'd love to see gold continue to do well. I'd love to see Bitcoin get some risk appetite runs. Um, I'd love to see the stock market, have volatility not go back up to 60 again. But this could be one of those years where it's like, who knows? Maybe this is one of the more like persistent volatile years, and nobody really knows what's going to happen. I mean, that could be the new normal. That's going to be making your head spin. Okay. MicroStrategy still at 310. Ethereum still on the left-hand side of the trend line. Copper, like I said, looking pretty fine. Japanese yen, anything here? Let's check currency strength for the day. So New Zealand on top, Swiss on the bottom. Nice. 120 pips between those two. Swiss on the bottom makes me happy. It's like better than the fruit on the bottom yogurt. So anytime I'm seeing Swiss on the bottom, that's good. I do wonder also if the Swiss is going to intervene at some point. They've been very quiet, hands off the wheel, but their interventions that we saw back in 2011 and 2015, completely rocked the Forex market. And we're still sitting at historical levels. Like the Swiss has been like this. Well, here's why. And I'll make another interesting proclamation. I think that if gold finds the 200 moving average, the Swiss franc is going to weaken because of that. There is an interesting correlation between Swiss franc and gold. So if gold does correct, okay, and again, I say the flip side of that is if gold capitulates even higher, Swiss is going to get stronger for another potential crash move, which would not be fun. Okay, but if we do see a correction in gold, I think the Swiss is going to go with it, and some of my positions I have that have been legging into for a while are hopefully going to work out. So something to keep in mind. I wouldn't be surprised if gold getting weaker. If gold gets weaker, Swiss probably gets weaker along with it. Japanese yen continues to grind higher. I'm still long FXY, so I'm back. This is kind of nuts. I'm back up towards it's not huge gains here, but I do have some shares of FXY. I might be up a couple $1,000 here. FXY, I'm up $3,000. Let me see. Do I want to? It's like, do I want to hold more? I mean, we had a whole volatility event on the Japanese yen, and now FXY is just slowly going. I don't know how much higher I expect this really to go, but I guess we find out. Dollar yen is kind of the inverse of this, right? So it might be wise to, if we've got dollar yen coming into lows and potentially symmetry here, would anybody be shocked on the dollar yen if it holds this level and then bounces back off of it? If that's the case, I probably need to take some profit on FXY. So maybe that's not a bad spot just to grab some profit. I kind of hate taking profit on FXY because it's been just a nice little hedge trade, but I'm not up, I'm not killing it. I'm up $2,800. Big whoop, but I think I could sneak in, maybe a run to like 66 or so. So 65.88. If I get another dollar out of that, it'll be, I don't know, they're like 600 to 800 bucks. I'm going to put a chart line here at 65.50. If we get there, I'll start looking to take some profit. Here's another technical formation. Is it possible that this is a range where we just go from high to low, high to low, high to low? Is it a range, or is this the potential bottom where we have a low and a center high? And if we actually break above this, are we about to see some Japanese yen love? That's a question mark, but could I take a $64 position that looks like a profit target at 65 and take it up to 75? Well, that'd be a much bigger win. So I think in terms of just holding the shares, I'm just good holding the shares. If this could pay me $6,000, $7,000, $10,000, or I can get back in for more shares down here. I don't think the Japanese yen is going to weaken to infinity. I think at some point, like, this Japanese yen is going to hold firm. They're the one central bank that is still raising rates right now compared to everyone cutting rates, and you got to wonder how that plays out. So I think it still is kind of in the hedge camp for me, although not as aggressive as some of the futures hedges I have. It could also be something that if it breaks and goes higher, I would like to benefit from that move. Germany, like I said yesterday, look for some type of like cup and handle formation. We dropped aggressively. Well, I mean, this could work either direction, but I think from this flush down, if this pulls into a bullish pattern, that looks like a cup and handle. So we drop aggressively, we V bottom, we come back up here for some indecision, then we see if it can break and go higher. So I'd be looking for a trade like that to see if Germany can get back to highs. This would be in line with the early rotation we saw out of the U.S. Germany was one of the best performing countries this year, along with some other Eurozone countries, and all of a sudden that was just reset with that kind of systemic risk we saw over over the April 7th through the 11th. Oil, yeah, I didn't mean to skip oil. Oil, it's up. I mean, this little like flashy bottom is in. I don't know. I mean, I'm still very skeptical that oil can get above the 200 moving average. We did break this floor, so if you're lucky on the long side for oil, maybe coming back to like $65 or $66. If that becomes resistance, we could come back down and revisit the lows, right? I mean, I don't think oil is going to be like breaking and then breaking. I don't think oil is going to 80, $90. I don't. So I think if oil is going to go from this low and coming back to what is support, all this support back here to become resistance, we probably have room to run to like 65 to 65.50. So if you're long, that's about it. I would expect this to still be a high that's relatively safe. This would be a low that's relatively safe. I'm sure there's some oil traders that are just doing strangles, doing iron condors, just selling some premium, and just trying to pull in some income as it's just very slow and choppy for the next little bit. UNH we talked about. Yeah, there was a big miss in earnings. It was down like 19, 20%. It was a 4 times earnings print. So I expected to see about a $40 move and it went $120. So I guess it'll be about a three times earnings print. So that's just a big whiff. But I did put on a trade on UNH to see if I can catch something around 440, see if it could fill the gap. Okay. All right. We did gold, we did silver, we did Bitcoin. Coinbase 172. I got a Coinbase earlier for profit. That was good. Closed out about 95% of that credit. Copper still looks good for next week. Japanese yen, I was on. FXY, I'm going to hang on to it a little bit. Chart alarm set. I'll debate on this. I might take the profit. I might take the profit and move on. But if, the Japanese yen catches some safe haven bid, it may or may not, but something tells me that the Swiss has been the better safe haven this year versus the Japanese yen and the dollar. EWJ, I'm in profit. I want to see if this gets back to the highs around 71.50. So let me set a $71 chart alarm. That'd be up about $6 a share. It's not bad. I would take that. I'd take that win. If I get up there, I'd be up a little bit of profit, maybe $5,000 or so. I'll see. Germany, we did looking for like a cup and handle pattern. FTSE, same thing. I just like the structure less. I still like Euro stocks and Germany better. Argentina, I missed my 200 moving average to buy. It obviously was like, holy crap, this market is. I mean, this was like everything dropping, right? This is like the systemic drop that happened from April 7th to the 11th. We had the big rip on Wednesday. It's right back where we started. So there's no action for me on Argentina. China, same type of thing, looking for a cup and handle. Brazil, want to see if we can break above this. I'll set a chart alarm here above the 200 moving average. So greater than 200 EMA. Same thing with Latin America for back above this chart alarm here. Greater than 200 EMA. Mags, thanks to NVIDIA, this is getting dragged lower. Tesla, I might be getting some Tesla assignments. We're at 240 today. 255 chart alarm. Let me set this at around 250 today. I don't know if we can get there. If we can, then I actually got some profit on Tesla without taking on any assignment. Because the premiums are so high on Tesla, I wouldn't mind getting assigned. Let me see how many trades I have. I might have 400 or 500 shares coming if I get assigned this weekend on Tesla. So I do have some shares that are dollar cost average shares. That's not what I'm talking about. I'm looking at the this trade here. So potentially 100, 200, 300, 400 shares. 500, 600 shares. Okay, well, that's going to be, wait. Yep. 500 shares, all my April 17th. So 1, which is a portfolio margin account, 2, portfolio margin account, 3, portfolio margin account, portfolio margin, and then a margin account. All right, so potentially 500 shares. Now, they're each in individual accounts. So 500 shares, the plan, I talked about this yesterday, possibly getting assigned at 255. My break-even price would be around 247.98, and we have earnings coming next week. So Monday, after the assignment, and this, again, if price goes up to 250 today, freaking great, because at 250, I'm pretty much sitting at a $200 to $300 profit. But we've got to rally $10 in the next, 5 hours? So maybe, but the market's going to have to cooperate a little bit better than it is today. Otherwise, I'll take the ownership. We're probably just dealing with some range trading. What I want to make sure that I do on Tesla would be either, 1, I buy a very cheap out of the money put and have any type of quick protection, or I see what a debit spread looks like where I were to buy a put and then maybe sell a put. If I could pay, let's say $500 to make $20 to $30, that would be enough to offset my cost by another, $15, $20, lower my cost basis from 247 down to 227, sell a covered call, and just quickly get this price down as aggressively as I can, down to like $200 or less. Okay. So, you thought about this, United Healthcare, right? Well, let's say Tesla has the same type of move. If it drops like 3 times what it's expected, that's a huge, huge move. So I need to make sure I have some type of protection. Now, I could put on a collar trade and let it go both directions. And if the put works out, great. If the call works out, that's fine. But what I was contemplating is, if I don't cover the upside and somehow, some way, Tesla comes in positive, I don't know if it is. I don't know if it's going to. This is certainly a volatile stock, and I think with the deliveries and the inventories and the question of Elon Musk and everything that surrounds it, I think that I need to do everything in my power to protect the downside and get the cost basis as low as possible. So anyway, we'll talk through it. I'll figure it out. I'm hoping I can flip it for a nice little winner. If I pay for a debit spread, but it goes up, $10, $15, $20, I still make a couple $1,000 on it. I'm happy with that too. But I want to make sure that if it drops, $30, $40, $50, $60, let me take a look at Tesla here. Because the average move on Tesla is around 14%. And you can see a lot of double digits, so somewhere between 10 to 14%. I'll be on the high side and say, let's say we have a 15% move. So a 15% move, and the price is 240. So I'm looking at about a $36 move. Okay. So can I put something in that helps me lower my cost basis, $15, $20, $25, $30, and then I can sell a call and collect another 15 or 20. And just, within 2 trades, I could probably lower my cost basis by $40. I'd be okay doing that, So I don't think it's a difficult one to repair, but definitely got to be mindful of the capital that I'm allocating to own the shares and then flip it. Okay, so they'll see. And somehow by surprise today, if we get up to 250, I won't take any assignment and I'll just take the profit. I'll close out for probably $1,500 today. All right, what else? We did Mags. Apple, closed out for profit on Apple this week. Amazon, I still have some ratio spreads out here down to the 150 level. Broadcom, I'm staying out of that for right now. Google, I'm still dollar costing averaging into that one. Meta, I'd like to see Meta go lower, which it is. So we came back to the 200 moving average. We're dropping. I'm going to see if Meta can settle back into previous. This is a good spot to mark in a chart if you like Meta. There's a huge gap back here between 450 and 400. And there's a previous high from the 2021 deleveraging. So this is September when Meta peaked in September 2021. The NASDAQ peaked in November 2021, and then we dumped. Okay, that was a 76% decline. Now, technically speaking, surviving that market, I think that Meta still is fundamentally strong. We go to Meta. Okay, Snowflake-wise looks pretty good. Price to earnings, not crazy expensive considering most tech. NVIDIA's like 200 times earnings, but fair value at 887. If I could scoop up some Meta at 450 or 400, I wouldn't mind it. Wouldn't mind that at all. So there's ways to trade it. There's ways to income trade it. There's ways to start a position, buy fractional shares. But just thinking if we came down into this like 450 to 400 zone, I'm going to start taking some nibbles on Meta. Microsoft, a lot of income trades here. Close for a winner, close for a winner, close for a winner. And still have, I don't know if I have other trades on for Microsoft or I just closed them all out. I think I stacked up quite a few on Microsoft. See if I have any combo trades in. Just fractional shares. So I'm just sitting with a light dollar cost average in Microsoft, and break even price on most of these is around $400. So if we get back to all-time highs, that was 450, that was 468. If that's the big question, is if we go to all-time highs, then hooray. Then I'll sit from a 416 break even and look at 50 to $60 a share and be pretty happy with that. But I'll just ride it out for right now. Netflix, I have an earnings trade on. We have earnings today after market. I got my expiration on Netflix out to May 2nd, so I've got a couple weeks to let price do its thing. If Netflix comes in super positive, perhaps we come back to all-time highs. If that's the case, I'll close out for a win. If we have a super negative Netflix and it just, this is my concern with Netflix is we would go high, low, high, low, high, low. We can make some fresh lows. That's an easy trade. If price is way down here, easy money. Price is up here to highs again, easy money. If it's in between, well, then I'm going to give it a couple weeks to see if I can hit the expected move. Okay, NVIDIA 101. Like I talked about this yesterday. Basically, NVIDIA had to write off like $5.5 billion, and they're potentially losing out on $18 billion of sales because of a little nuance in this whole trade war tariff situation of what the U.S. is, claiming that companies can and can't do. So somewhere costing NVIDIA about $18 billion is not a good thing. That gap yesterday, we're still flushing down a little bit lower, and that dragged the markets down yesterday too, especially with the Fed not coming to the rescue, which they're not. Tesla, we just talked about. Berkshire. I'd like a top. I'd like to call the top in Berkshire, but I think that's a stupid trade, so I'm not going to. Plus, I looked at like a call condor. It's just not a good trade. I get like terrible premium for what would cost me maybe $2,000 or $3,000 to make like $100. It's just not a good trade. So I'll wait. I think that there is. I don't know. There's something here in kind of Buffett's genius. Like, hey, we're worth hundreds of billions of dollars, and we're sitting on 20% of its cash because we think that things get worse and valuations come down a lot. So, meanwhile, 1 and 3 year bonds are up. 7 to 10 year bonds are up. TLT showing a little bit more. Again, resiliency, yes. Some security, yes. Some stability, yes. But still not anything fantastic. So 10 year is still above the Liberation Day announcement. And I think that's a spot where, I don't know. This is my biggest concern literally from June to December when the Fed starts cutting rates. If the bond market did this last year where the yields went higher, that's my biggest concern going into June, December this year, is that the Fed starts cutting rates and the yields go up. You talk about a freaking backfire of fundamentals and talk about a backfire of 40-year trends. That would not be fun. To basically see that everything that you thought was going to happen and everything that history would tell you could happen is not taking place. So I don't know what's going to happen when the Fed starts cutting rates. Usually when the Fed starts cutting rates, they're cutting rates in a period where times are slowing down. Powell even admitted it yesterday, like there's an economic slowdown. They're worried about the administration uncertainty and all that's causing the markets. Price stability and labor is still highly important, as well as inflation data. But if the Fed cuts rates and the yields respond the opposite like they did in September, that's not good for anybody. That's terrible for small business. That's terrible for any homeowners. That's terrible for any refis. That is going to freeze everything. So I hope that's not the case. I hope this will resume what's been a pretty consistent 40-year trend. But I do think that this could be an interesting year where the Fed is essentially, their powers are zapped, they're neutered, they're put into a corner, and they can't do anything. It's like how many trillions of dollars of liquidity is it going to take to get this market price stability and rescue the market? Probably 15 or 20 trillion dollars, not 6, not 700 billion. I mean, it's like the amount of leverage that is in the system now to make things work is staggering. It's like for every $3 of debt, we might get $1 of growth. So I don't know what it takes. And I also think that the lows we saw at 21% are not low enough. If the Fed's going to come to the rescue, it's probably when the market is just so beat up and like everyone is just wanting to stick their head in the sand. And that's probably 35, 45, 50% lower from all-time highs, I should say. Okay. So we'll see. This is a big concern in 2025. If the Fed is cutting for 100 basis points, do the yields actually go with it, or is there a shakeout and you kind of get this whole this non-correlated bizarro bond trade? I don't know. Okay, let's go currencies. Unemployment, everything looks okay. Junk bonds, this is your AAA, BBB, CCC. So credit spreads have tightened a little bit, which is better than loosening. So we stabilized a little bit better after that Wednesday rip, which is kind of encouraging. LQD, same thing. So looking to see like making sure there's better liquidity in the markets. You can see it. It's not as crazy out there as it was a couple weeks ago. China, anything here? Just kind of waiting this out. I'm still long Baidu and Baba still. I do have a legitimate concern this year that the U.S. might, instead of doing this tit for tat tariff war, maybe the U.S. says, hey, let's going to delist your stocks. And I'll be on the hook for, taking losses in Baba and Baidu. And that will piss me off a little bit, but out of my control. JD has earnings May 15th, and I've got a covered call up to $40. I'll see if earnings are positive or not. Schwab dividend, Schwab growth, just kind of hanging in, dollar cost averaging into both of those. This one I bought around $27. It's down, $1.50. I'm not that worried about it. So I'm just going to sit on Schwab dividends. Schwab growth, I bought a little bit of this one at the 200 moving average around 26. It's down a little bit more. It's down like $2.50. And then SCHY is the non-US dividend. Or I'm sorry, the non-US exposure ETF. Advanced decline line versus this. This would be another one to watch for. I keep talking about this market breadth indicator. If we come back down to revisit the lows, this is probably a good timing indicator to maybe get short-term long. So I will be watching this again. Do we come back down to, let's say, I'll put a chart alarm down here at like 6. Actually, I don't know if it's going to go that low. I'll put like a 7 or 8. That's 7. I'll go 8. I mean, honestly, you know what? Fudge it. I'll go to 10. It's already trading at 20 right now. I'll go 10. So 10.8 is my horizontal line. So I'll just set a chart alarm there on the line. If that activates, then I'm looking for some timing to get long again. Same thing on the NASDAQ. If we come back down to, I'll say 730. And just right there where we had some good timing on that short-term pop. Chart alarms, let me get rid of the inactive ones, delete all inactive. There. Okay, let's get to some currencies. AXP, we have earnings, came in positive this morning. We're up to 253. I took profit on the 417 expiration, and I'm looking for the May one to also give me some wins. I need price to get back above 260. So I'll set a chart alarm at 260 and see if I can take another income trade on AXP. Everything else is okay. Palantir, I've got full expirations for some ratio spreads. This is up like, I think $5,000 or $6,000 on Palantir. Palantir is up around $4,200. So I'm just going to let these expire. So ratio spreads, bull put spreads, naked puts, just let it all add up about 95% of that profit. I'm just going to let it expire. So I don't think Palantir is going to drop $50 today. I think I'm pretty safe to let it expire. Carvana, stay out of that one. I'm staying out of that one. O'Reilly, my hypothetical trade worked out, but it was a terrible buying power requirement. It was like I had to tie up like 10 grand to take a trade for maybe $500 or $600. So I didn't take the trade, but it did work out. Like timing wise, it did what I needed it to do. So anyway, I just thought this was crazy for a little tiny auto parts store with little tiny brick and mortar locations is a $1,400 stock. Redfin, let me go to Rocket. I haven't looked at Rocket in a while. down to 1230 until like rates come down and mortgages look a lot more enticing. I think, you know, anything with housing, mortgages is going to be tough. Uber looking good. Ratio spread. This one is going to be looking good for full profit. Lyft, I'm still long. I bought shares at 1179. Sectors, let's get currencies and I'll let you go. Aussie CAD fill in a pocket. I think we put in a nice little bottom here. This is a multi-year retest. I mean, this is why dollar cost average and trade robots on pairs like this, because they're freaking rock solid. And, you know, what was a breakaway move is completely reverted. And that's exactly how I trade this. Aussie Swiss, I'm looking for a bottoming formation. I'm hoping that we're getting it. Like, I'm hoping this is a bottom. And if we come up with some type of head and shoulders or some type of cup and handle, then another retreat or another rally back into the pocket. If we can get back above that, I'd love to see some highs get tested at some point. You know, again, like I said, maybe this is a gold play. If gold is going to correct, then maybe the Swiss gets weaker. Ford, you want to see Ford? I mean, you can buy and be excited about a 3% dividend or 6% dividend, but you're going to get like 0 to 0 price appreciation. I mean, if I'm buying Ford, it's like, well, it looks exciting at COVID levels at $5 a share. Otherwise, the liabilities on Ford, it is such a difficult stock to trade because it goes nowhere. It's super low beta, and the pension liabilities make this like almost a stock that's like it'll never make money. So, I mean, here's what it looks like. Looks decent, but earnings are forecast to decline. Debt's not well covered. Dividend at 6% is not stable. But trading below estimated value, earnings are growing. Like, these are good. These are encouraging. Maybe it helps because in the space of a 6.4 price to earnings, right? Like, that's cheap. Okay. But you're looking at a fair value at $12. And like, what upside are you excited about? I mean, I traded from COVID lows and I let this thing go at like $15 and I was stoked about that trade. And then I was dumb enough to get back in here at $11 and I'm still holding some shares. And I'm like, well, I guess if I bought some shares of Ford at 1150, which was strong support, I didn't take profit. So this is area 1. If we ever came down to COVID levels, area 2, and I'll just get rid of it. You know, area 1, area 2, this is my break even if I got filled on both those levels. Anything above that, take profit, move on. I mean, it's just not a great stock in my opinion. So, all right, let's go back to currencies. Aussie Swiss, I'm looking for a bottoming formation. Hopefully we get it. If I see a bottoming formation, I'll start moving my buy stops lower. Yen pairs, as I said, be careful. Aussie New Zealand, we do have some daily oversold conditions. I'm going to just scale through this one. I've got some levels in to add some buys and some buys and some buys. And I'll just hang in there. Like this currency never really bothers me. I'll just hold. So if I level in, I think I can get it back to break even. This is one losing position. That's my profit target. So if I go 1, 2, 3, 4, this goes lower, you know, and then I just follow my break evens. As long as I turn it into profit, I'll take, you know, 50 to 100 pips net. So I'll scale into this one. Aussie dollar, I was long. I closed out. This trade's done. This could be a bottoming formation, right? We could have this sharp move here. Maybe it settles back in for another range trade. If it goes higher, then there's a good swing trade. You know, there's a good swing trade to symmetry with a stop loss below, but I want to see the dollar index show us that it's going to go lower. I think the dollar index is poised for a correction. I think the dollar index, you know, forms a bottom, goes back up a little bit. CAD Swiss, hopefully, you know, off of these recent lows is going to start giving us a bottoming formation. I'd love to see this make its way up, pull back here, have a head and shoulders, measure a third wave and fifth wave, get the fudge out of this trade. Okay. I mean, I mean, again, I'm talking like a drawdown of maybe 3 or 4% in my account, but I mean, I don't know, hundreds of pips away from my break even here. I guess not really. I'm about 100 pips away from break even. But man, this is such a big trading opportunity. I'm ready to close these trades out. I've been, you know, enjoying a whopping 4% swap for 2 years. Who cares? I want pips, man. I want to close these out for, I mean, honestly, I'm going to be close to like doubling the size of my account. If I get the pips that I want, I'm going to turn a huge profit on these Swiss pairs. But that comes with the unknown of like, is the Swiss going to break something? Are we going to see like some crazy flash crash that's going to be, you know, thankfully I don't trade with all my leverage and I still have like 80% cash and margin available, but this is the threat and the unfun side of trading Forex and levering in. You know, it's like I just have to trade really small and eventually I get the trade that I want, but If I see more confidence in a bottoming formation, then I will move these buy stops down, but not yet. CAD yen, no trade. Maybe if this holds, if CAD yen holds, you know, I don't know. Just if you're taking stabs at this one now, there's probably some ugliness of the lows, but we could bounce back up there. If we have a risk on rally through May and June, July, I could see the yen getting weaker. I am really surprised we haven't had more of a follow through since Wednesday. So Wednesday last week, and the market ripped up a ton. It was like a face melting bullish day. We had no follow through Thursday, a little bit up on Friday. We're sideways again. It's like there's been zero follow through. So I do wonder if seasonality wise, we can just make a slightly higher high, and we haven't seen it. So if that is the case, I could see the Japanese yen getting a little bit weaker with some type of risk on rally. Yeah, so I'm getting swap, and technically they're historical lows, so I'm holding it. You know, I mean, to me, the upside is if we're trading at 30-year lows, I'm going to be a buyer. It's that simple. And so I just scale in. I give myself, you know, probably 1,000 to 2,000 pips worth of wiggle room, scale in every 200 pips, 250 pips, and then hold to the target levels and the patterns that I want to see. So, I mean, I've done it for 15 years, and it's been a pretty good process so far. So, but it does take this. This is definitely the more patient I've been. I've been in Swiss pairs since the beginning of 2023. So literally, I've been in these pairs for 2 years. I've got some swap to show for it. I mean, I think I made, you know, 30 grand last year on positive swap. It's better than holding and getting dinged, but I'm also upside down in some drawdowns. So I'll manage it. Adam says, time to talk about gold. We did talk about gold. The gold's fine. It's just crowded. It's overextended. If gold's going to go any higher, it's because the market is essentially using that as just a crazy safe haven. Be aware of the capitulation move higher. But gold, in my opinion, is going to be, if it goes higher, it's likely going higher as this like crazy safe haven that's going to crash. If it pauses and pulls back, I think there's still dips to be bought. So I still like long gold. I just want to buy lower. Swiss yen, no trade for me. Euro Aussie, stay out of the crazy volatility. Euro CAD, I mentioned this week, if you're watching on a smaller time frame, watch that resistance for potential sell trade. Stop loss above. Just be careful. Make sure you confirm that on a smaller time frame. Euro Swiss, you know, holding lows. This actually would be a beautiful pattern here. You know, we tested this low. Okay, if we come all the way back up to this high, we have a pullback. I think that's a beautiful 3-wave move. And if I get back to that level, I am going to make lots of pips and lots of profit on Euro Swiss. If it's a 5-wave move, that's fine too. We come back up here, pull back up here, pull back up here. That's fine. That's good enough. But that's what I'm looking for. Aussie Swiss, I literally did that, Lee. Very similar. I'm just looking for a bottoming formation. Here's Aussie Swiss. So is this going to work its way like 1, pull back, 3, 5, right? Like 1, 2, 3, 4, 5, and we get back to these levels. That's fine. I can turn this whole thing into a profitable trade. You know, what I'm looking for right now is before I just dump a bunch of money at these lows, you know, I will wait, because if we come back down to the lows again, I want to scale back in and lower my cost basis. This is my target 1 for right now, but I think if I can measure out a 1, 2, 3, 4, 5-wave move, that's my profit target. Right? Like I don't know. I'm just not in a huge hurry. It's like I've been holding these freaking trades for 2 years. So it's like, am I in a hurry? Not really. I'm just going to, you know, stick with my technicals, let them set up, let them confirm, add to my winners, and figure it out. Yep. And I'm CAD Swiss too. I'm Aussie Swiss, CAD Swiss, Euro Swiss, New Zealand Swiss, Dollar Swiss. I closed out Pound Swiss already. I want to keep that one has higher leverage requirements, so I closed that one out. CAD Swiss, I'm still looking to see if we have a bottoming formation. Euro Swiss, you know, again, if we come back up and have some type of 5-wave move to get back to like 96, I think we can also head up to like 98, 99. Just want to measure it out. Euro Pound. This one I was buying at the lows at 83, took a couple of profits. I'm just letting a robot work on this one. Euro Yen, no trade. Euro New Zealand, I said watch for the sell-off. I'm just not trading it. Euro Dollar, take your profit. Trail your stops, take your profit. Super overbought on the daily time frame, likely going to have a pullback. But we were long around the 108 handle, took profit around 111.80, 111.60. So that was a pretty good trade. I'm not in it right now. Pound Aussie, be careful. It's probably fading. Pound New Zealand, Pound CAD, similar. I said Pound CAD, if it comes up to these highs, look for some resistance to sell. That's about it. Pound Swiss, no trade. I'm out of the Pound Swiss. I still think this one goes up. Like if you're interested in this trade, I just don't like it because the margin's like 3 times more expensive than my other Swiss pairs, but this is probably going to find this pocket. So, I mean, don't be surprised if we go down, up, maybe pause, and then go up and fill the pocket, or we go down, up, down, find the lows, revisit the lows, and then work our way back to the pocket. So this trade is likely going to hit this support, this area, anywhere for profit would offer up another 250 pips to 350 pips to 450 pips of profit. It's going to take some time, but we're going to probably form a low, form a bottoming pattern, and then price will revert with that little crash move. Not a bad trade. It's certainly an awesome discount. This was as bad as the crash we had in 2022, I believe. Nope, 2024. That was the July to August deleveraging. So we're just kind of starting from there again. But I'm not heavy on pound Swiss because I closed it out when we were up above this like 114 level. I've been scaling in since it's like 111 for 2 years. Once we got up above these highs, I closed out my profit. I'm pretty fortunate, thankful that I did. But this isn't a bad spot to restart and just stay small, and you can get anywhere between like 250 to 450 pips, I think, pretty safely. Okay. All right, pound yen, staying out of that one. Pound New Zealand reverting back down. That's fine. We had some noise up here, but it's still on the smaller time frames found resistance and sold off. Pound dollar, as I said with euro dollar, moving stop losses right now. If you're long this pair, great, move your stop losses. If you're short this pair, don't. Not yet. I don't think it's a good short. Like, let this thing maybe get up to resistance at 3,400, then look for a short. Otherwise, if you're long, stay with trailing stop losses. New Zealand CAD. Bought around 8,000. It's up to 82.76. I just level in. I was going to buy here and buy here. So obviously this one was in at 8,000. This one at 77 didn't fill. But I still think we're just in a big range. You have a massive low down here and a massive high right here. All this noise at buying lows are now starting to show profit. New Zealand Swiss, same thing. Looking better. If we can get a 1, 2, 3, 4, 5, that's one pattern. Also, this could be just one giant wave. This could go all the way back up here for 1, 2, 3, 4, 5, and maybe I come all the way back into this inefficiency. Again, this chunk of buy stops, I want to move them lower. I'm just not ready to do that yet. I want a little bit more proof here. If this comes back to retest the lows, I'm going to move these all lower and look for a bottom. No trade. New Zealand dollar still running. I mean, I took profit near the range highs. I don't know. I mean, it looks good, but if it's a pullback and it goes higher, like there's open space here on New Zealand dollar. It'd be okay by me. I'm just waiting for an entry if I'm going to do something. I've got no trade on it right now. I was buying off these lows, took some profit. Dollar CAD. If it doesn't hold at 3,900 or 3,860, then perhaps this does, in fact, it's just a crazy top that we put in after. I mean, I was long here, and I got out. I didn't short this. I know there's a swing trade. We talked about that swing trade. If you wanted to do that sell trade, that stop loss, and go after some symmetry, you're already out of the trade for profit. So I don't know. This is in the middle of all this chop. This is a huge range with a midpoint. This could be a very messy spot. So I'd rather wait. If I can buy it lower, or I can sell it higher, or if it does turn here and bounce, then maybe there's a buy opportunity to go small stop loss and then asymmetry to the upside. But I wouldn't be surprised if it just gives you a bunch of headaches. Like dollar CAD's not an easy currency pair to trade. It can be pretty messy. Dollar Swiss, not a good pair. We broke the lows by about 150 to 200 pips. This is another one I'm watching carefully, because if this starts to get extreme, which it already is oversold, I'm starting to look for some type of pullback bottoming pattern and some type of recovery back into maybe this midpoint or back into 9,200. But a bottoming formation to me is worth following to take some trades. Not there yet. Okay, dollar yen. I think dollar yen, may be able to revisit the lows, and it's really close to them already. If it goes a little bit lower, I wouldn't be shocked if it's a bear trap in a bullish trade. So just a big ugly range for what? 2,000 pips roughly. What was the high we had? Like 161, 162. Yeah, 162 highs all the way down to 140. I mean, a 2,200 pip range. So if it comes back down to those lows, like don't be surprised if it bounces there and it's just a big 2,000 pip range, right? So that's everything. Okay, I'll let you go for today. Let me make sure I'm not late for a session. I think I'm good. Anything for today? Yeah, I'm good. All right. Thanks, everybody. Have a great Thursday. Markets are closed tomorrow for Good Friday. Have a great holiday weekend. See you soon. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.